Welcome, brother. It's an unusual time. If anybody is here, please let me know that you can hear me or not. I mean, the voice. Can you hear me? Just write it down. And at the same time, please don't forget to give simple like free of cost. First, let me know that you can hear me or not. Okay? If anybody is here, because I need to know that voice is clean, voice is clear. Important to understand. Hey, brother. Hey, Ravi. Hey, Shwash. Guys, can you hear me? Thanks for coming. Thanks for joining in this unusual time. I know it's very unusual, but I have to go outside. Sounds good. Thank you, Ravi. I have to go to outside, so I thought, okay, let's do the weekly analysis job, and then if I feel good, then I mean, if I feel relaxed, then I will continue a little bit about the trading plan, or I will just quit the trading. Thanks for confirming that sound is good. Thank you, brother. So this is dollar index, and I'm the weekly chart. I'll just go both of them all together. Trading plan. Okay. The trading plan is every weekend. This is forbidden. Okay. You have to do it every single week. In either Saturday or Sunday, you have to go to the dollar index first. First, very fast. You have to do this every single week. You have to go to dollar index weekly chart. If it is the random week, if it is the first week of the month, first weekend of the month, then you have to start from the monthly chart. As we have one more week left for this week, so I will go to the weekly chart. Here is my weekly chart. I will expect where market will go, the weekly candle, which way it will expand. Okay, that is the first thing you have to predict. Now, if you confused where market is actually heading by the weekly candle, don't don't be upset, okay? Because this is just a prediction depending on the price action. If I'm predicting market will go higher, that means this week I am expecting a high bull candle from the weekly chart. But at the end of the week, if I get a bear candle, okay, am I wrong? No, I'm not wrong. Because if I get a single run toward my expectation, I will go for that, and I will be profitable for that week, because the rest of the week market was falling. So I'm not going to anticipate, or I'm not going to attend to that lower run. Okay. Now, from 1 minute chart, scalping is totally different. If you would love to take your entry depending on the bias, the first rule is you have to come here to the dollar index weekly chart. You have to predict where this week market will go. It, is it going to up or is it going to low? How do you know that? Right now, price is over here. Okay. I have weekly fair value gap over there. Just let me remove this one. I have a weekly fair value gap over here. I have nothing left below here. I have nothing left except this small weekly fair value gap over there. Let me mark the weekly fair value gap below here. Okay. So here I have a weekly fair value gap. Here I have a weekly fair value gap. I have two weekly fair value gap above the market, below the market. Market is at the level. I mean, it is at the middle of between these two rails. As we have done our monthly analysis, we know I am expecting market will reach to that level at least. Okay, so that's why last week I was bullish, where every other YouTuber or the mentor they were expecting lower run, but I was expecting higher run. I was expecting market will go toward that fair value gap. So at the end of the week, that was a very high run. But at the same time, we see in Friday, Thursday and Friday, high resistance liquidity run. That means dollar was going higher, other market was also going higher, so that is actually high resistance liquidity run, and in that situation I actually avoid trading whatever. So I am this is the trading plan. Okay, I'm just going with trading plan and the weekly analysis, both of them all together. Deepak Kumar, I'm here live today. Usually I watch every video after live is finished. Welcome Deepak, welcome to the live streaming. Thanks for joining, brother. Right now price is over here, so what I have to do, I have to find some level here. Is there any reason market will go higher, or is there any reason market will come here? If you see, I can have this water block. Okay, so I have just marked the water block opening and the mean threshold. Okay, week to week 50% from here to here. This is the 50%. So that is the mean threshold of the weekly order block. So I have weekly order block and weekly mean threshold of the order block. Hey George, we have just started. Okay, the first thing I have just told about the order block, weekly order block, and the mean threshold. Now I have this lower fair value gap, I have this higher fair value gap. Both of them are the weekly fair value gap. Okay, don't be confused. From monthly chart, I'm expecting market will reach to that area, to that monthly inversion fair value gap. That is a perfect inversion fair value gap in my opinion. Weekly fair value gap, both of them are overlapped at that this area. Okay, so this area is very important for me, and I'm expecting market will come here. Now it will go directly over there? I don't think so. Market will go higher, will retrace, then go higher. It will do like that way. Now what is my expectation from this week? As I can see, market actually came to this water block, the mean threshold. It has perfectly, it is actually holding the price. Okay, nobody closed above the mean threshold. So it actually tell me that I'm expecting this is going to hold the price and it is going to send it back to this fair value gap, this lower inversion fair value gap. This is my expectation. Is it can go directly over there? Obviously it can do that. There is nothing wrong with that. But I'm expecting market will come here to that fair value gap, or it will go toward that fair value gap. Okay, after that it will go higher. I want to see some kind of lower run for this week. But if I see from the beginning of the week it is actually going higher, I will just change my direction and I will go with the monthly time frame or monthly analysis. That means market will reach over there. The first thing is I want to see some kind of lower run. From Monday, I would love to see some kind of accumulation at that area. Tuesday, some kind of higher run. Wednesday and Thursday, lower run toward that fair value gap. And Friday, it will go higher again and it will close somewhere here. Okay, so my expectation for this week. Okay, in Monday, I would love to see this type of things. Tuesday, it will clear the buy side liquidity from the Monday. Wednesday and Thursday, I would love to see some kind of expansion toward that fair value gap, and Friday it will come back again into the range and it will close over here at that area. This is my expectation from this week for dollar index. If I see in Monday we get some kind of lower run, then Tuesday actually has taken some liquidity. Wednesday and Thursday, Wednesday, okay, especially in Wednesday, it has given me the higher expansion. Then I will start to think, okay, my analysis is wrong. I'm not going to get the lower run. I'm going to get higher run toward that weekly fair value gap. Because remember, from higher time frame, I mean monthly time frame, we are expecting price will reach over there. But from weekly chart, I can expect this order block will hold the price and send it lower to that specific fair value gap before coming over there. This is my expectation from weekly chart. Now I'm going to daily chart. So this is daily chart, and just let me go over there and let me mark it. There is it. Just let me see. Okay, this one is okay. And cool. Now I'm coming to the daily chart. So from daily chart, I have this fair value gap from weekly chart. Okay, this is the fair value gap from weekly chart. Don't get confused. This is the daily fair value gap. This is the weekly order block. This is the weekly mean threshold. Okay, above this I have this buy side liquidity from this is from daily chart, and this is the weekly fair value gap above monthly inversion fair value gap over there. Okay. Hey, GXN, how are you, brother? We have just started. So we have just finished the weekly chart. Now we are in the daily chart. So from daily chart, what you can see before this buy side liquidity, that is very clean buy side liquidity. Okay. Before this buy side liquidity, I have this daily fair value gap. What is this daily fair value gap? The last fair value gap from daily chart. This candle low, this candle high. This is the daily fair value gap. last fair value gap, there is no other fair value gap before that buy side liquidity where price came to that fair value gap, this daily fair value gap. Is there any body closed above that daily fair value gap? Is this fair value gap broken? No, it's perfectly holding the price. Now week went higher a little bit. I'll be okay with that because there is your daily order block as well. So you can see the this level, that is the daily order block. But I am not going with daily order block as I have very nice weekly order block and mean threshold of that order block. So I'm not going to mark that order block from daily chart, but I will go the daily fair value gap, last fair value gap. It has hold the price. Okay. Now I can expect from weekly chart market will come here, okay, to that fair value gap. This is the weekly fair value gap, don't forget. But from daily chart I can see this is a very nice volume balance. See this candle high, this candle, I mean this candle close, and this candle open. There is no price action between those, so there is nothing at all here. This is the daily volume balance. What I can expect, this week market will go toward that volume balance first. Okay, if I'm expecting lower run from weekly chart, and from weekly chart I'm expecting price will come here to that weekly fair value gap. Don't get confused. All good, bro. How are you? I'm fine, man. I'm very fine. This is your trading plan. Okay, from weekly chart you are expecting lower run. Now from daily chart, weekly chart, we are expecting price will reach until that fair value gap. But when we are in daily chart, we will expect some other level before reaching here. So do we have any other level? We have this volume balance, very nice volume balance. Okay, why we are expecting it will reach over here? Because we have seen the last fair value gap from the daily chart holding the price. Okay, so the first thing is we will expect market will come here. Now when I will understand that no, I am wrong with my daily bias, when I will see market went above, it closed above the daily fair value gap. Just for example, just think in Monday we have seen market has closed somewhere here. So or maybe it went above that high. It has just closed over there. Then you have to start to think, okay, we are wrong for the bias. We have to change our expectation. Market is actually going toward that buy side liquidity, that fair value gap, weekly fair value gap, to that monthly inversion fair value gap. There's nothing wrong. Okay, this is not kind of, there's nobody who can be right to his bias every single time, because this is prediction. This is our prediction depending on the price action. So prediction can be wrong, but that it does it mean you are going to lose? No, man, you are not going to lose. You have to see what price is actually doing, and you are seeing this from your weekend. Now when you are analyzing your price from the weekend, there is much more possibility if you strict with your bias, and if you see price is actually giving you the your expectation run, there is much more possibility to be the winner most of the time. Okay, if you see, if my expectation is lower run, if I see it is going higher, and if I strict that market will go low, that is wrong, because market is showing you I would love to go higher, but I'm strict with my weekly analysis and I'm thinking market will come here. That is wrong, perfectly wrong. You have to admit that your prediction is wrong this time, because market is going higher and it is directly telling you I'm going higher. How do I know? When I will see a body close above that swing high, maybe, or maybe above that daily high, daily fair value gap high, but best is when it will close above that swing high. Then I will understand, okay, I'm wrong, because from the price analysis we see right now we are seeing this last fair value gap holding the price, but when price close here, there's nothing that can stop price to take that buy side liquidity. There is nothing, no level over here that can stop. Okay, but if you see market is actually going lower, maybe some kind in Monday we will see some kind of sloppiness, choppiness, because that is Monday. Then Tuesday some kind of manipulation, Wednesday expansion, Thursday expansion. We will go with our bias. Simple, man. Why daily bias is so tough? It's not tough, man. It's very easy. All you have to do, you have to come to this weekly chart. You have to see where right now where price is. Price is over here. Is there any fair value gap above the market price? Is there any fair value gap below the market price? Yeah, I have a fair value gap over here. I have a fair value gap below here. So I have two fair value gap. Which way market will go? Where is right now? Where is the price? Right now, price is over here. Can you see any level that is actually holding the price? Yeah, I can see a water block, mean threshold. They are actually holding the price. Okay, there is nothing here that you can mark that is actually holding the price. Then you start to think, okay, no, market is not going lower, it is going higher because there is nothing that is holding the price. As I have these two level, I'm thinking market will go lower toward that fair value gap. Do price need to reach here? No, I don't need to see that. All I need to get from the weekly chart is the direction, weekly direction, which way market can go this week from dollar index. Okay, you have to start from the dollar index. This is, I mean, this is forbidden. You have to do it. I don't care about any other people. Whoever talk you anything or something else, I don't care. I mean, there's some popular YouTuber. They actually, maybe I have seen one guy. He's very popular. He has near about 58,000 subscriber to his channel, and he was telling that we don't need to analyze dollar index. Okay, I don't know why he told that. This is our barometer. If we get lower run, every other market will go higher run. If it we get higher run, every other market will go lower run. So we will get our confirmation from dollar index. That is very important in my opinion. Even ICT told that you need to analyze the dollar index. Okay, so dollar index is important. Now, as I have this I mean water block level that, and I can see it is perfectly holding the price. I am expecting market will come here toward that fair value gap before reaching here. Remember, this is from monthly chart. From monthly chart, I am expecting market will come here. From daily chart, see the daily last fair value gap. It is actually helping me to understand that my expectation can be right. Why? Because the daily last fair value gap is holding the price, and I can get a lower run at least until this volume balance. So if you don't see any volume balance, go for the weekly, I mean daily fair value gap. If you don't get any daily fair value gap, then you will start to think, okay, your weekly analysis is not correct. Maybe market is going high, but I believe you will get at least a fair value gap at least. Okay, if you don't get the volume balance, you will get a fair value gap at that area before the weekly fair value gap. I guess so. I mean, we will discuss about that later, but right now we can see this clean volume balance. So I will go to hourly chart now. So this is the hourly chart, and from hourly chart you can see, remember this line and that line. Okay, these two black line, this is actually weekly fair value gap, the lower weekly fair value gap. I guess if you are still confused, when you will go to your I mean what is the chart, you will understand, or you will mark it by yourself. Okay, just let me remove this one and just close this one. Don't need that one. Okay, so at this area into the weekly fair value gap, I have this hourly fair value gap. Okay, that didn't trade. I mean, that has traded over here one time, but that is a very shallow run. I'm not okay with that. Now, above this hourly fair value gap or weekly fair value gap, see this relatively equal loss. Okay, this low and that low, they're relatively equal loss. So they're very clean sell side liquidity. See this equal loss, this low and that low, they're relatively equal loss. So I have sell side liquidity here. I have sell side liquidity here below this daily volume balance. This is the daily volume balance. Above this daily volume balance, I have liquidity here, sell side liquidity here. Now, I have buy side liquidity here, though it's not clean. I mean, not clean buy side liquidity. See this high and this high, they are not relatively equal highs even. So that is not perfectly, I mean, perfect buy side liquidity for me. But I have very clean sell side liquidity here, here, and here. So I will expect market will take the sell side liquidity first. Now this sell side liquidity is the first sell side liquidity, that is my target. If it can take that liquidity, then this volume balance from daily chart, that will be my target. If it can reach here, then I will go for that sell side liquidity. If it can reach there, and then this final sell side liquidity and the weekly fair value gap and the hourly fair value, everything is over here. When price will come here, then I will expect market will go higher toward that weekly volume balance. I mean, sorry, weekly fair value gap and the monthly inversion fair value gap, because from daily chart I have very clean buy side liquidity here, very clean buy side liquidity here. So all I want to see some kind of lower run this week, downward candle. Okay, down candle. So I don't want to go to 15-minute chart because that will be more information and it will be difficult to understand. and I will go with the 15-minute chart or daily. You know, every day I just tweet a lot. Okay, so if I see any setup, anything, I just tweet. So I guess it's enough for the dollar. So this week, this water block will send price lower to that fair value gap. That is my expectation. Where it will reach, I don't care. I just want to see a lower run. I will go to Nasdaq. This is the Nasdaq chart, and let me remove this to level. Okay. So now this is the, what to say, I mean the Nasdaq daily weekly chart. Okay, this is the all-time high. Market never reach above that high. So this is all-time high for Nasdaq. This is the future market Nasdaq weekly chart. This was the last fair value gap from weekly chart. All of you should have remembered. This was the last fair value gap. So until here, price was actually holding the price, and I was expecting price will reach to that lower fair value gap, and actually it has traded that bearish order block. I don't want to go with that breaker, not bearish order block, that was the breaker. Okay, whatever. This was the weekly fair value gap, so I was expecting market will reach here. Okay, that was my expectation when I saw this reaction from there. I was expecting market will come here. You will understand how I have explained in dollar index. I will just show you the precision from Nasdaq now. When price was here, I was expecting price will come here. So I got this down close candle. After that, it went higher. Where did it go? It has broken this weekly fair value gap. So I'm going to remove that weekly fair value gap. It has broken it. Is there anything that can hold the price before taking that buy side liquidity? I can't see anything here. No fair value gap, no water block, nothing that can hold the price to take that buy side liquidity. So that buy side liquidity is my target for this month. I mean, so sorry, for this week. What scenario do you look at continuous contract, and when do you look at current contract NQS now? There is difference in within both those. No man, look over here. See BADZ, adjust for contract change. If I just change this, see now I mean now the price action is different. If you go to NQH, you will see this is not the price action. This is not the price action from NQH. But when I have adjusted it, so this is the adjusted contract size. Okay, I mean whatever price action you are getting from NQH, you will get the same thing here from the running contract. I mean NQ1. This is the running contract. All you have to do, you have to just add, I mean push that button BADZ. Just you have to push that button. You will get the price action or the price with the contract changed. If I just show you, see this sign, this is the contract sign. This was the March contract. This is the June contract, September contract, December contract. Every contract change, I mean the price change, you will, that will be adjusted by that one. So I guess you will understand, man. This is the same price action from NQH, so don't be confused. Carry on, Moso. Okay, carry on, carry on. I will go with that. Carry on. Gold, I will go, brother. I will make this a longer streaming today. Okay, just let me go one by one. Excuse me. So from here, when market was actually rejecting from the last fair value gap, I was expecting price will come here to that fair value gap, specifically that fair value gap. Okay, you will understand how we actually expect it, and then when we go lower time frame, how we get more precise price action. Okay, this week I'm expecting price will reach over there, and it will take that buy side liquidity. That is my expectation. That should work for this week. I mean, I want just a run around that area. It will take that buy side. That is my expectation right now from the market. I will come to the daily chart now. Now from the daily chart, there is three level of the liquidity. You see all of these highs are relatively equal highs. This high, that high, that high, they are relatively equal highs. If you go to 1 minute chart, you will see very clean buy side liquidity. I mean very clean swing high at that area. So that is the, sorry, that is the most obvious buy side liquidity. Then this high, why this high is important? Because that high is around that consequent encroachment, around that weak consequent encroachment. Okay, so that is a level. I mean, just let me show it to you from here to here. Okay, so this is the consequent encroachment and that high, they're aligned at the same level. So I didn't go with that, I went with that high. As I have this level, so market has 99% of the chance it will clean that high. Until that high, that will be cleaned. Okay, then this is as the highest high. I will not go with that market is going to take that one or not, that is different. But until that high, until the middle buy side liquidity, that should be taken by this week, by, I mean, coming week. Okay, from tomorrow to end. Okay, so from here to here, how much the handle will be? Will be near about 131 handle. Okay, and if market is overzealous, then it will take that buy side liquidity and it will make the all-time high. Okay, all-time high for Nasdaq. Then we will expect the lower one, I guess so. Now from here, if you remember when I was talking about from the weekly chart, when I saw this, it has been rejected from the last weekly fair value gap. I was expecting market will come here toward that weekly fair value gap. As I am expecting right now, dollar index, that dollar will go toward that lower time frame or lower fair value gap. Okay, I was expecting same thing from there. At the same time, I have marked the lowest fair value gap from daily fair value gap. Now in dollar index, I have marked the volume balance. Okay, don't get confused. Just remember what I told you from dollar index. I have marked the volume balance. Here I have marked the fair value gap from the daily chart. What I told you from dollar index, that market will go toward that weekly fair value gap. But when I went to daily chart, I told you I want to see market will reach to that volume balance first. Then if it fail to hold the price, I will go for the sell side liquidity, then sell side liquidity, finally this fair value gap. But if market would love to go higher, it can go high from that volume balance from the dollar index. Same here, look over here. From weekly chart, I was expecting price will come here to that fair value gap. Okay, don't think this is a hindsight. I have marked this beforehand, before even market expand toward that fair value gap. Okay, there was another fair value gap, I even didn't mark that on. So if you are confused and if you don't believe me, just watch my weekly analysis. Okay, this week will I mean the Friday 29th, so that would be Friday, I think 1st of January. Okay, 1st of January I have made this live, so you can watch that one. Okay, so I had marked this daily fair value gap, and I told that if market would love to go here, it has to reach that fair value gap at least. Then we will analyze the price. Is it holding the price or it is going lower toward that fair value? So I don't need to reach price over here. I just expect from the weekly chart market will come here. That is my expectation from weekly chart. I will go to the lower time frame. In this case, I came to the daily chart, and I have marked the lowest fair value gap. Over DXY, I have just marked the volume balance because that is more obvious. Same thing, man. It has come here, it went higher. Okay, when it went higher, I have marked this daily fair value gap from the last daily fair value gap. It broken, and last day it was actually unexpected. I didn't expect that run, but it is what it is. It has just went above. Okay, and we had no chance to participate. I mean, in my opinion, I had no chance to participate to that run because that was out of expectation. Right now I have this sell side liquidity over here, I have some sell side liquidity over there, but that is different matter. Before taking this buy side liquidity, I am not looking for lower run. I want to see price will go directly toward that buy side liquidity. Now what is my expectation from this? In Monday it will do this type of accumulation phase. Okay, Tuesday, it will take the Monday accumulation sell side liquidity. Wednesday and Thursday, it will expand toward that buy side liquidity. Maybe it will take that buy side liquidity or that buy side liquidity. After that, in Friday, it will come back into the range. So that is my expectation from this week. Just don't think it will go directly toward that buy side liquidity and it will clear that. Obviously, market can do that. There is nothing wrong with that. The market is not bound to listen to us, but we have to expect the price action like that way. This is the way we have to expect. If market just go and take that buy side liquidity, that is unexpected. If we are lucky, maybe we will join that run. If we are not lucky, maybe we will just miss the run. But we shouldn't be expect something, boom. We shouldn't do that because this is the narrative. Whatever I have shown you here, this is the narrative. And market should work like that way. That is why I'm telling you the way this week I'm expecting. All I'm expecting higher run. Market can go lower, obviously, man. Obviously, it can go low. There is nothing wrong. It can just go and take the first fair, first buy side liquidity, then it can expand lower. Nothing is going to hold price or pound price not to go low. It can obviously go low, but we should expect price action from our previous expectation or previous experience. So from previous price action, we can see price has just come to this last fair value gap. From daily fair value gap, it went higher. The last fair value gap from daily chart and the last fair value gap from weekly chart. Remember, both of them failed to hold the price. When both of them failed to hold the price, this buy side liquidity is obvious. Now from weekly chart, I'm expecting it will take that buy side liquidity. From daily chart, and I'll be sure market will take at least these two buy side liquidity. Then maybe then it can come lower again, retrace to certain fair value gap, water block, breaker block, anything. It can come back again. Then later it can take the buy side liquidity. That is different matter. Right now, until this two is not taken, I'm expecting higher up. I will go to 1 hour chart now. And guys, I really don't like to go 4 hour chart. All of you know, if I get very precise price action from daily chart, I don't love to go 4 hour chart. Okay, I am not familiar with 4 hour. I am familiar with weekly, daily, hourly, 15 minute, and 1 minute. If I don't get anything from 15 minute chart, rarely I go 5 minute chart. If I don't get anything precise from daily chart, very rarely I go 4 hour chart. But rest, I mean, most of the time you will see I just use daily, hourly, 15 minute, and 1 minute. So from what to say, this is the price action from Friday, very unexpected price action, and I have explained how to actually, I mean, when the perfect setup failed. If you didn't watch that video, please watch that on. I guess everyone knows about that, but we don't give that much concentration of that. I mean, about that information. That is why sometimes we take the losing entry. But if you watch that video, I have just uploaded yesterday. I guess that will help you a little. Okay? Right now, from hourly chart, I don't see anything peculiar here, but obviously it can come to that fair value gap. Why that fair value gap? Why not this fair value gap? I would love to see if market would love to go higher. If it want to, I mean, if you see a lower run, you will expect market can come until that fair value gap, not this one. Okay, why? Because this should work as a breakaway gap. The last fair value gap, this should work as a breakaway gap. So that should be the entry gap. In my opinion, if you see lower run first, or any intention that market is going lower, as I told you in Monday, I think market will do something like this. In Tuesday, it went lower to clear all of this liquidity from Monday. At the same time, it can reach to that specific fair value gap. Then Wednesday and Thursday, I will expect this type of run. Friday, maybe it will close somewhere here. So that could be happen in this week. This is not for guaranteed. I mean, nothing is guaranteed in this market. This is my expectation. This is how I actually read the price. Now, if it do, I mean, if it acts like that way, don't just don't forget this. Okay, if it acts like that way, I will just go to my tweet and I'll tweet that, see brother, I am always right. Okay, if it doesn't work like that way, I'll just keep quiet. Okay. I'm just kidding, man. But this is my expectation from this week, and this is how I read the price, and this is the trading plan. You have to do this every weekend, either in Saturday or Sunday. Okay? Now I would love to go to mini S&P. I will go gold, Euro USD, GBP USD. Okay, all of them. But before that, I would love to come to I mean the mini S&P first. Oh no, not that one. Sorry. So this is the E-mini S&P, and you can see market has, I mean, the NQ market is almost over here. Okay, I mean, it is very near to clear that buy side liquidity. At the same time, it is failing to take that buy side liquidity. Okay, so from weekly chart, I'm expecting some kind of SMT. Okay, SMT, that means NQ will clear the buy side liquidity. At the same time, E-mini S&P will fail to take the buy side liquidity. That is my expectation from E-mini S&P, and I guess from next week I will move to E-mini S&P. Okay, I'm not sure yet, but I have to wait for more information. Then I will actually change my expected. I mean, change my contract. Oh, sorry, not contract. The NQ to ES. Okay, not sure yet, but I guess I am just going to move from NQ to ES. Right now, I'm just hanging. Okay, I'm not sure what I'm going to do. So from here you can see prices traded that fair value gap. This is not fair value gap in my opinion. That is a just gap, and it has no value in my opinion. Okay. So and also I'm going to make a core content folder or playlist to my YouTube channel. So there I will start from beginning. Okay. If you were very new or beginner, I guess that will help you. If you are already a pro, I guess that will help you as well, because that will be full of very little information that actually we don't care or we don't concentrate. But because of not concentrating with that small information, we take so many losing entry. So that's why I'm just thinking I will start that core content, and that will be free. Okay, this is not kind of mentorship or something. That's totally free. I will just do it and make it to my YouTube. I will never go for the mentorship or something. So from Nasdaq, you see, I was expecting market will take that high. Okay, but from E-mini S&P, I would love to see market will reach until that order block. Okay, this is the order block. So it has already taken that high. So I would love to see market will go toward that order block. At the same time, NQ will take the buy side liquidity. Then both of them will reverse. Where it will reverse until this fair value gap. I mean this last fair value gap or this inversion fair value gap, because this fair value gap is aligned with this inversion fair value gap. So it will reverse until that inversion or this fair value gap. Okay, that is different matter. It will take so long, so I'm not going toward that. But right now I'm expecting NQ will reach until that order block level, maybe the mean threshold of that order block. Okay, I'm not going to mark the mean threshold, but it will reach until that level. So I will actually see both of the price NQ and E-mini S&P. If I see when E-mini S&P has reached at that area, at the same time NQ didn't clear the buy side liquidity yet, then I will start to think, okay, E-mini actually is going toward that mean threshold, and NQ is going to take that buy side liquidity. So this is the expectation from weekly chart for the E-mini. I'm expecting until that level. Okay, so what is that level actually? 4934.25. Market will reach over there this week. I'll go and lower run. I'm not expecting any lower run because market has traded that fair value gap. Yeah, if market would love to go little low, it can come toward that order block level from weekly chart. This is the order block, and order block. Okay, I have tweeted that about the sequence. Yeah, I will make that video as well. If you understand what is order block, then you will understand. If you watch that sequel or sequence video, I guess you will understand which one is actually the order block, and rest the down close candle is not order block. Okay, I guess so. So obviously it can reach to that order block, but I don't want to see that. I want to see some kind of higher run until it has been reached at that area. So my weekly analysis or my weekly chart, weekly expectation is telling me market will go higher. What can happen? In Monday, we can see some kind of this type of things. Okay. In Tuesday, it can reach to that order block, maybe to the open or to the high of that week in Tuesday. Okay. Wednesday and Thursday, we will see this, and Friday it will reach here. It can happen. I'm not telling that it is not possible. Obviously it is possible. It also can happen. There is nothing wrong with that, but I don't want to see that. But it is more obvious though, because it has traded a fair value gap. Now this order block level is more obvious because this is the order block, actual order block. So this is the order block. Okay, if you see over here, when this market, it has traded this fair value gap, this area of something, this fair value gap, when it went higher, this order block is obvious. Market, when it has closed above this area, see, when it has closed above this order block high, there is 99% chance market will trade that order block. So this is the rules over here as well. When it has traded this fair value gap, now it has 90% chance that it will trade that order block first, then it will go over there. But if market would love to go lower, it would love to go lower, obviously it can do that. It can consolidate over there because it is very near to the highest high. So everything we will see, but this is my expectation from weekly chart. Looking forward to the sequence video. This should glue all aspects together for better understanding. I guess so, Ravi. I guess so, man. I was thinking to move from NAS to SP. Because of the price action, man. Because of the price action. Until this month, NQ had the better price action, okay, comparing with mini S&P. But when NQ will take the highest high, then I guess market will go lower, okay. And when market started to go low, mini S&P will be the strongest sister, okay, between mini S&P, uh, Nasdaq, and the Dow. So she will be the strongest sister. NQ and Dow will be the sick. Okay, I don't go for the Dow. I just go for ES and NQ. So until now, market is going higher. When it is going higher, NQ is the strongest one. So if you take a entry to the NQ, in a very short time, it will it will go, or it will reach to your target profit, because when NQ start to go low, it go little low, but it go highest high. Like here, okay, when it started to go low, it go fast. When it started to go high, it just try to go high, but that is kind of sick sister. Okay, I don't know how to explain this. So if market start to go low now, then that should be the strongest sister, and NQ should go slowly. Okay, that is why I am planning to move NQ to SP very soon. So I need little more information that market is actually now reversing. If I see the reversion, I will just go here. Okay, if you remember, before October, before hmm, October, I was trading the, how to say, the mini S&P. So from October, I have actually switched into the Nasdaq because that was I was expecting higher run. So I have switched to NQ. Now from February, I'm expecting lower run. So I will switch to mini S&P now. Is it clear, brother? If it is not, then I will explain more. Okay, just let me know if it is clear or not. So price action from here for the, what to say, the mini S&P. I have this daily fair value gap. This is the last fair value gap from daily chart. So this is the order block level from weekly chart. This is the last daily fair value gap. Okay. What I'm expecting is market will come here, and maybe this daily fair value gap is going to hold the price, but a week can go over here to that weekly fair value, weekly order block, and then it can reverse. Okay, but all I want to see is this daily fair value gap will hold the price until it reach to that fair value gap. I'm bullish for mini S&P. Now is it going directly here? No, as I told you, brother, as I have explained. Okay, in Monday I will see this type of accumulation phase. Tuesday it will go lower, maybe it will make this, there is a daily fair value gap, it will trade that daily fair value gap. Then Wednesday and Thursday it will expand higher, maybe until here. That could be a fake breakout as well. Then in Friday it will close inside that daily fair value gap. That is my expectation from this week. Okay, so I am bullish, but that doesn't mean market can go low until Tuesday. We will see. This is the power of three. Okay, this is the power of three for weekly candle. Week opened here. This should be the manipulation in Tuesday. So this is the accumulation phase in Monday. This is the manipulation phase from Tuesday. Wednesday and Thursday expansion. In Friday market will come back again into the range and it will close here. So this is the weekly candle. I am just expecting this thing over here. See this manipulation. After the accumulation phase, maybe there will be a fair value gap from daily chart. In manipulation phase, that means in Tuesday it will trade that fair value gap. Wednesday and Thursday, that is the expansion phase, it will expand higher. Friday market will come back again into this fair value gap or inside the daily weekly range, and it will close there. So that is my expectation. But obviously market can go directly above. I mean, it come here, it can do that directly. There is nothing wrong with that, but I will expect like that way. So this is my bias. Scalping is different, fully different. For scalping, I just need 15-minute chart and 1-minute chart. Okay, for scalping or for taking my entry, that's enough. 15-minute and 1-minute. Then why I need the bias? If you understand what is bias or which way market is actually heading, the 15-minute chart is very easy to analyze. Very easy. It's like drinking water. Very easy. So that is why we need the weekly analysis. We need the daily bias. Both of them will help you to trade over here. See this price action over here. Now, if you understand from the daily chart or daily bias that market is going higher, in Monday you will see this type of things. Okay. So in Tuesday you will see this thing from 15-minute chart. When it will come here, you are not thinking market is going lower. You won't think like that way. You know from daily chart, this is actually the manipulation. From Tuesday, this is the manipulation. In Wednesday, when it will come here in Wednesday. Okay, it will take all of this liquidity. You are not going to think that okay, market has taken all of this buy side liquidity, now it will go lower. You are not going to think like that way, because you know this is the expansion. So market is actually going higher, more higher. In Thursday you will see this, and Friday it will come here and it will close over here. I mean, for example. Okay, so you won't be confused when market will start to fall. You are not going to think okay, so market has taken some buy side liquidity now, or maybe previous week high, maybe previous days high. Now market is going lower toward that sell side liquidity or some kind of fair value gap over here. No, you are not going to think like that way, because you know from daily chart what should be the expectation, what should be the bias, why market is going lower, why market is going higher. Is it clear? Does it make sense, man? Does it make sense? Just let me know. It is make sense or not? Okay. Thinking. Okay. Okay. Makes sense. Thank you. No problem, Ravi. Sadam Danjuma. I am late. Yeah, you are late, man. You are late. Seriously, you are late. So that is why we need daily bias video or daily bias analysis for 50-minute or lower time frame, because from 15-minute chart I just need, for taking entry I just need 15-minute chart and 1-minute chart. But how do I know when market start to go low? Okay, how do I know where it is actually heading, where it is heading, why it is going low, if I don't have any idea from the higher time frame, from daily chart, from weekly chart? Why why you market is going lower, how long it will go, where it is heading, is it going higher, is it going lower? I don't know. But if I know what is daily analysis, what is weekly analysis, where market is going from the higher time frame, when it start to go low, we will just I will go to 1-minute chart and I will maybe take a short over here until that liquidity, because I know market is going to take that liquidity before going higher. Because from higher time frame, weekly and daily chart, I know that market, this is the manipulation phase and actually market going lower to go higher. So after taking that entry, very short entry, I will prepare for buy, because that is our main focus, that is our main bias. It makes sense, man. Perhaps we are late. Yeah, brother, you are little late, and I think you have to watch the first part from for the dollar index analysis, and I guess it won't take so much time. Okay, so after completing the streaming, please watch the first part. That was all about the dollar index. Okay. Hey Neuroy, how are you, brother? How is everything going on? You guys are late, little late, but don't get panic. I have just explained everything, so just watch it. Okay, I'm not going to delete it. So until now, is it clear, guys? Until now, I mean, from dollar, NQ and even S&P, is it clear? Okay, I just need your confirmation. Then I will move to, I think, Euro USD first, then GBPLG, and finally gold. But before that, I need your confirmation that you guys understand it perfectly or fully. Okay, whatever I told you, why you need the daily bias, why you need, I mean, whenever you will going to take your entry from 1 minute chart, I mean, why do you need daily bias then? Is it clear or not? Okay, just let me know. You have to do some hard work. Okay, here you have to write it down, you have to comment it, so that I will understand that you guys got it. Because if you don't let me know you are getting it or not, then I will start to think, okay, I'm just talking, but these guys are is not getting anything from me, and that will make me upset, because I'm spending time so that you guys can understand. Okay, and this is not for this week. Here I'm with you now. Maybe I'm doing this for you, all of you. Okay, I admit that i'm just I'm not the best, even I'm not better than you. You guys are the best, trust me. You guys 1,000 times better than me. I know nothing about the price action. All I am doing here, I'm just sharing my understanding with all of you, so that you can understand where is your I mean, where is your mistake, why you are not getting this. That is why I'm doing this. Okay, don't think you are here to understand this week bias, so I will do it for next week, you will get it again. No, don't think like that way. I'm not giving you the bias here, I'm just giving you the way you will do it by yourself. So from next week, first you will do it by yourself, and if I can make the video, or if I can come live to make my weekly bias, you will compare your analysis with me, and then you will ask me if you don't do it beforehand. Okay, like over here, when this is the, I mean, I'll just read your comment, but before that I will just explain these things. Okay, when I was with ICT was doing weekly analysis every single week. Okay, now first I was waiting for his weekly analysis. When he will do his weekly analysis, then I will go for that. Then slowly one day I started to think, okay, let's do it by myself first. Let me do it by myself. I would love to do my weekly analysis first, then I will watch ICTs, how he do it. Let match our analysis. If my analysis is wrong, if my analysis is right, that doesn't matter. I'm thinking market will go high, and I am just pointing some level. When ICT will start his analysis, I will match them with my information. Is it going to match, or we are doing something different? Then I can compare myself. Where is my lackings? Why my one is not working? Why his one is working? This is how I learn it. If you do the same, I mean, this week, okay, no problem. You are with me, all of us here, no problem. Next week, I will, if I can do the video, I will do it in Sunday. Okay, in Saturday, you will do your weekly analysis first. Man, there is nothing wrong with the bias. If you are totally wrong with your bias, that is not going to lead you a losing cycle, because bias is nothing except over confirmation. It can be wrong, it can be right. Not every trader, even ICT, is not always right about his weekly analysis. Nobody is always right. Nobody is always right about their daily analysis. Nobody, simply nobody. So there is nothing to be shame that I will do it by myself, but I don't know. Why you don't know? Obviously you know. You have already spent so much time in this trading or in front of your chart. So already you know what you have. The lackings is you are not courage enough. You are fearing. Okay, you are thinking that whatever I will do, that will be wrong maybe. No man, there is nothing wrong, or there is nothing right. Trust me, there is nothing wrong, there is nothing right. Trading is just a probable game. This is just a game. So all you have to do, you have to do the weekly analysis beforehand. Okay, then if you believe me, or if you think, okay, this guy can give us something, then you will come back to me and you will compare your analysis with me. You don't even need to tell me that. Okay, you will just do it by yourself. Then you will compare it with myself, I mean my analysis. If you see it is working the same way, that means we are learning. Because whatever I'm doing here, if I see another guy did the same thing, then we will think, okay, we are actually analyzing the chart by ICT concept, both of us, and our expectation is same. That means we are actually going toward the right way. Now later it didn't work, it works, that doesn't matter. This is how you will improve yourself. So don't waste your time. Okay, if you just come here every week and if you just watch my analysis, that is totally wasting your time. You have to do it by yourself. Until you start to do it, you are not going to improve. All I want is your improvements. Okay, just learn this, leave me alone. Just leave me. You don't need to come back to my channel or Twitter, anywhere. You don't need to come back. I don't want to see you. Trust me, brother. For, I mean, Allah, I'm telling it by my Allah. Okay, I don't want to see you to my channel, to my to here. Okay, I don't want to see you. I want you to do it by yourself. You will be you will get your freedom, man. You will get your freedom. All I want is your freedom, nothing else. You have to do it by yourself. Okay, otherwise this is not going to help you. You are just wasting your time, and don't waste your time. Just do something else that will help you to build your career, maybe your future. But don't waste your time. I'm sorry if I say, I mean, rudely. I'm extremely sorry. Please forgive me, but that is true. You have to do it yourself. Otherwise, you are just wasting your time. And I don't want you to waste your time here to my channel. I don't want that. All I want, just get your freedom, fly in your sky. Okay? I don't want you to stay here. As soon as possible, please leave me. That's my request to all of you. Please earn the money. Don't do PhD on this price action. Do the work on your chart. Get your freedom. That's all, man. That's all. Crystal clear. Okay, Ravi. Thanks, brother. Thank you, man. Thank you. Karisan, understand, master. Karisan, I'm not master, brother. I'm just your brother. Hey, George. Thank you, brother. Thanks. Hi there. Thanks, bro. No problem, bro. No problem. Just get your freedom. Don't waste your time here. I'm just a guy like you. I have just learned this one. So why you are not? Because you are not doing your analysis. That's the wrong thing. You should do it. You have to do it by yourself, man. So here is the Euro USD, and this was from, I mean, I marked this water block long before. This was the weekly last fair value gap and the consequent encroachment. Okay, so market came here. I am expecting this sell side liquidity will be taken. Below this, I have this monthly fair value gap. Inside the monthly fair value gap, I have this weekly fair value gap. Okay, so I have done this before. I didn't do it today. I think maybe last week I have done this. All of this thing was done yesterday. I mean last week. So I will go with this, okay, because I can see the precision over here. The price has actually reached to this volume balance, weekly volume balance. It has completely closed the volume balance, but right now the real volume balance is over here. So until here, this is the real volume balance. I'm going to remove that. That is the volume balance, okay. Right now I can see the volume balance here only. This is repriced. Market doesn't want to see this as a volume balance. It is seeing this one as a volume balance. Why? Because this is just a week. I don't care about the week until I don't see the body, both body, okay, buy body and sell body to the volume balance. It is not balanced, or market will see that that as a volume balance until there is both of the body. I don't know you get it or not, but right now this is the volume balance that left. Price came to this consequent encroachment from the monthly week. So there is a week from monthly chart. So this is the consequent encroachment. This is the last fair value gap from weekly chart. Price come here, trade that consequent encroachment, rejected from that. also the last fair value gap from the weekly chart hold the price. Okay, it hold the price. Market came lower. Where did it came? To this water block. Why this is water block? Market has traded this fair value gap first. Okay, it didn't trade this water block. Don't think this is the water block. This is not the water block. This is the water block. This one is not water block. When market came here, it has traded this fair value gap, this imbalance. Okay, guys, you will understand this when I will upload the sequence video or the core content. Okay, I will name the playlist core content. You will get this information when you will see the when you will look for the water block and when you will look for the fair value gap, when you will look for the breakaway gap. You will get every information from there. Okay, when market came here, it has traded this fair value gap, went higher. This is the water block. Okay, and I will have to mark the consequent encroachment, but as I see the reaction from water block, I'm happy with that. Now, what is my expectation from this week? What I would love to see? I would love to see I will get a higher run. Until where? Where I would love to see the higher run? Until the consequent encroachment of that week. Okay, from here to here. That is my expectation from weekly chart. So this order block will hold the price and send it back toward that consequent encroachment. Why this consequent encroachment is important? Because that is the 50% of that week, and 50% of the week is actually working as the 50% of the fair value gap. As this is the last fair value gap and this is the last week, this week is very simple to identify. uh, if you are confused about this, just you have to spend time with me. I guess that is the way you will understand how to say, how to mark the consequent encroachment and which week you are going to mark as your targeted week or targeted consequent encroachment. Okay, so right now I am expecting this order block will hold the price and send it back toward that consequent encroachment. That is my expectation. Okay, liquidity SW, what do you mean by that? I mean the liquidity sweeps, you look for weeks. What did you say, Hubs? I mean the liquidity sweeps, you look for weeks. I didn't get your question, brother. I'm sorry, but my English is little weak. So if you can explain little more, that will be easier for me to understand. Okay? I'm sorry, because of my English, man. I'm very weak in English. Extremely sorry, man. So just try to explain it little more. As I wanting is this order block is going to hold the price and send it back toward that consequent encroachment of that week. Okay, that is my expectation from weekly chart. Now, can price go lower and take that low? Obviously, it can do that. There is nothing wrong with that. But all I want to see, higher run from this week. I want to say higher run. Now I will go to daily chart. From daily chart, you can see this is the order block from weekly chart. Okay, this is all I have actually marked beforehand. Trust me, brother, I didn't mark it today. And if you just watch my last weekly analysis, I guess you will get this thing. Okay, I was expecting it will come here or somewhere, something like that. So that was the last fair lookup from daily chart, and I can see it is actually holding the price right now. I will go for that buy side liquidity. Okay, this is my buy side liquidity. See this high and that high, they're relatively equal highs, so that is actually the buy side liquidity. Now this is the I mean funny thing, man. From weekly chart, I am expecting market will come here to that constant encroachment of that week. From daily chart, I'm telling you, I will go for that buy side liquidity. Why is that? Why I'm just making it smaller? Because I don't need that huge run. I need some other level near the price that can I target. If I see a run toward that buy side liquidity, I will be profitable already. So I don't need to care about the price where it is going to close. Is it going to close over there? Is going to reach over there, or it is reversing from there? I don't care about that. Now, can it go little lower? Obviously, it can go. Why? Because in Monday, same thing, man. Something like this. Tuesday, it will come back again. Wednesday, Thursday, Friday. Same thing, man. again and again. I'm just looking for same thing. Can price go lower and take that low? Obviously it can do. How do I know that market is going to take that low? When I will see this daily fair value gap will fail to hold the price, it will close here somewhere. I am started to think market is going to take that low. It is not going toward that buy side liquidity, it is actually going to take that low. That will be my thinking after this last fair value gap will be broken. So from weekly chart, what I am expecting, why I am expecting that. From monthly chart, I can see this very clean sell side liquidity market will it will reach here. Why I'm expecting that? Because market has traded that volume balance, then it went lower, it has made relatively equal lows here, then it went higher to last fair value gap. Okay, it hold the price where it should go toward that sell side liquidity. Do you see any buy side liquidity here? No, I don't see any relatively equal highs, nothing over here, but I have very clean sell side liquidity over here. When I have very clean sell side liquidity over here, I'm expecting market will come here, and below that sell side liquidity I have these two levels. When I have these two level, I will observe them when market will reach here. Maybe then market will go higher or go lower, that is different matter. But until it reach here, I am bearish. When I will change my expectation, when I will see it will go above that high. When it will go above that high, because that is the first time when market was reversing. See, price was just coming here to here. Then the first time we got the reverse. It went one more time, it tried one more time to go above that high, failed to that last specific fair value gap. When it holds the price, it is going lower. Now from when price come here, this is the water block, it is actually holding the price. So I will expect market will go higher a little bit, then it will fall. From daily chart, you can see market has actually come sorry to this last fair value gap. Excuse me. Market has just come to this last fair value gap from daily chart, and the daily fair value gap is holding the price. I have very clean buy side liquidity. So market what can do? It can take that buy side liquidity, then it can go lower toward that sell side liquidity. So I am expecting higher run for this week. Then I will go to 1 hour chart. I talk too much, right, guys? Okay, just let me go over there one more time. So I think there is already buy side I have marked from hourly chart. Yeah, so it was marked already from the hourly chart. So I have this very clean buy side liquidity, and I have very clean sell side liquidity here. Okay, this is sell side liquidity from daily hourly chart. So market has taken this sell side liquidity. Okay, so I was actually hoping that market will take that sell side liquidity and it will reach to that daily fair value gap. It happened already, so I'm going to remove that from my chart. Right now I have this sell side liquidity. Okay, what I have told you that Monday and Tuesday accumulation and manipulation phase can take that liquidity as well. Okay, it can take that. So in Monday and Tuesday, I would love to see lower run. Then Wednesday, Thursday, I would love to see higher run toward that buy side liquidity. Okay, this is the buy side liquidity from daily chart and from hourly chart as well. And this parallel cap as was actually holding the price. So this is my expectation from hourly chart as well. It is here right now to this last parallel cap from the daily chart. Now, can is it going to take that sell side liquidity for sure? I don't know. I have no idea about that. All I want to see, it will make some liquidity in Monday, and Tuesday it will take that liquidity. After that, it has to go above. At the same time, this last parabola from the daily chart, it's not going to be broken. Okay, it can't be broken. Nobody can close below this parabola. That is all I'm expecting. So though my weekly bias is bullish, Monday, Tuesday I'm bearish. Then Wednesday, Thursday I will bullish. In Friday I'm bearish. This is the narrative things. Okay, I have already uploaded the video. If you go to my playlist, you will get a folder called narrative. Please watch that video. It will help you a little. Okay. maybe come to inversion fair value gap on min threshold. Yeah, it can come, brother. I mean, there is nothing wrong, but this is my expectation. This is the way I read the price, man. It's okay, brother. I will look for a video that explains sell side and buy side liquidity. Oh, okay. So sell side, buy side liquidity. I mean, see these lows, they're relatively equal low. So this low and that low, they're relatively equal lows. What is this actually? This is the, let me, okay. This is a zone for retail trader. They're thinking this is a very support, a strong support. Whenever price come here, price went. Come here, went. So I go at least for 2 times, but if you go 3 4 times, that is more stronger. But I go for 2 times at least. Okay, I don't go for one single high. That is not my draw on liquidity. I go for relatively equal high, lows, or if you see this is the relatively equal highs. That is my buy side zone. Okay, this is the zone for the I mean retail trader. They are seeing this as a strong resistance because we have so many tops here. See, so double top, triple top, four top, five top. Whenever price come here, boom, come here, boom, come here, boom. So this is a very strong resistance zone. So that is my buy side liquidity. Okay. If I see equal highs, that is my buy side liquidity. If I see relatively equal lows, that is my sell side liquidity. I don't go with single high or single low. I don't go for that. I guess it's clear to you. Okay. So that is for what to say Euro USD. Anybody has any question about Euro USD? I mean, I have already explained what I can explain over here. So please let me know that if you have any question or not. At the same time, you have to give me 5 minutes. I need to drink water, and the thing is, my water is little far away from my room. Okay, and as this is winter in my country, this is winter. Okay, so I can't just take my water and I can't put it beside of me because otherwise it will be very cold, and cold water is hard to drink. That's why I just take the water from the water heater, and it's little far away from my room. So I'll just come back. At the same time, find some question for me, man. I need to answer you some question. I need some question, man. Please make some question when I'll be back. First, I would love to answer your question. At the same time, don't forget to give me a like because I can see there's near about 20 people, but I get only 14 likes. So the thing is, please give me the like first, then continue. If you are new, if you are new, don't forget to subscribe to my channel. I'm not a very popular guy, but I guess you will get something that will help you for your trading career. Okay. So please, if you are new, you can subscribe to my channel. And I talk too much. So I'm coming back. At the same time, please don't forget to uh, make the question. Okay. Just I need some question from you guys. Thank you. I'm just coming back. Hello guys, welcome back. Sometimes I do it intentionally, okay? I just take a break between my live streaming intentionally because uh I want to watch how many people can stay here. Some people actually join over here to see these guys doing live, so let's join for some time. They're very impatient, okay? And the impatient people they can't be here to this trading industry, they can't hear. If you just go here and there for looking for some new stuff that will give you the precision or the winning trade most of the time, no man, you are doing wrong. You have to stick in one place. Okay, I'm not telling to stick here with me, I'm not telling that, okay? What I'm telling is, what I mean to say, when I started to learn this thing, I just watch ICT's video, no other video, nothing. Not even a single other YouTuber's video I never watch. Okay, if I get confused, yeah, the thing is, it was very difficult. It is very difficult to understand everything from ICT because he gives lot of information. And when you will watching the videos, keep watching, you will slowly you will try to understand, or you will start to understand what he wants to say you. Yeah, this is the fact, because he is the best teacher, he is the best mentor, he is everything, everything to me actually. So I just stick to his video. I never just switching here, there, here and there, here and there. And now, if any of you here, I can see near about 15 people. If any of you actually love to watch other videos or other mentors' videos for long, okay, maybe for 2 months, you are watching some others' video or others' mentors' video. Don't switch it. Don't come to me. Just stay over there, because every people has their own plan. If you just come here and join me, then you left me for after 1 or 2 months, you start to join others video, it will hurt you, man, because you will be confused. Everyone see the price differently. Okay, the way I'm watching the price here, you will never this get this information from others video. Okay, you will get something new from there, new concept from there, new price analysis from there. So you guys will be confused. Why is this? I got this information before, now I'm getting this. You will be confused, so you have to be strict in one place. There is no other play, no other way to learn this concept. That is why sometimes I actually take break inside my streaming, so that the impatient people they can just leave me. Okay, I don't need them. Impatient people, I don't need them. Now your turn to ask me the question. If you don't ask me the question, I will just close my streaming before even analyzing more price action. You have to ask me the question. And I'm not that type good teacher. I'm even not a good teacher. So I don't believe that whatever I'm telling you here, you are just getting that. I don't believe it. Obviously, you have some question. You have to ask me the question. I will answer them. Okay. I'm not the best mentor. I'm not the best teacher. And whatever I'm telling you here, you will be confused. So I need your question, man. Please ask me some question. I told you, why don't you guys ask me the question? I need the question, man. So okay. Sometimes I feel that no, maybe I'm a good teacher. Whatever I'm telling you here, maybe you are actually getting my point. Sometimes I feel like that way because nobody asked me the question. You still stay here, so I think whatever I'm telling, they're getting it. Okay. So this is GBP USD, and let me actually see what this level is. Okay, I forget everything because I don't come here. Okay, so this is the monthly fair value gap. Okay, Ravi, how can I ask question? Your explanation is brilliant. It's my lack of understanding and battling psychology. Kindly can you go back on the DXY? I was a bit late. uh I think there's some new people as well. Okay, I will go back one more time to dollar index in for a short period of time. Okay, and then I will come back again to GBP/USD and then gold. Okay, so I have left only GBP/USD and gold, so I will come back here. As I can see more people here, and when I have started there was near about only 5 to 6 people. So I will go back to dollar index one more time. I'm sorry if you are from beginning. I'm extremely sorry. I guess you will forgive me. Okay, please don't get angry. I will take only 5 minutes, maximum 5 minutes over here in dollar index. I'm sorry for that. So this is the dollar index, and you have to start from the weekly chart to your weekend, Saturday or Sunday. Now, where is the price right now? This is the price. What you should look for? Fair value gap above the market, below the market. So this current market, above this market, I have this weekly fair value gap. Below this market, I have this weekly fair value gap. So this is the weekly fair value gap. This is the weekly fair value gap. From monthly analysis, we know market is going toward that monthly inversion fair value gap. Okay, this is the monthly chart. You can see monthly price came here to this constant encroachment, rejected from that constant encroachment. It is going higher. Where it is going? To that monthly inversion fair value gap. This is the monthly inversion fair value gap. So I'm expecting market will come here to that monthly inversion fair value gap. Then market will go lower toward that fair value gap, because this is the more obvious fair value gap according to my analysis. Or we will see if market would love to go more higher or not. I mean, here somewhere, if it wants to come here or not, that's different matter. Right now I'm thinking market will come here, this monthly inversion fair value gap. When you will do this monthly analysis at the first of the month, you have to start from the monthly chart. Every week you will start from the weekly chart. So from weekly chart, I know market is coming toward that monthly firm inversion fair value gap. Is it going directly over there? I don't think so. Right now price is over here. I can see market has actually traded that order block, the mean threshold, perfectly. Okay, it is respecting that level. What if you don't see anything over here? No order block, nothing. What should you do then? What should you look for then? You have to think market is going toward that weekly fair value gap directly. If you don't see any order block or fair value gap over here, if you don't see that, you have to think that market is going toward that weekly or monthly and inversion fair value gap above the market directly. When you will see some fair value gap or order block that is actually holding your price, you will start to think, okay, before coming here, market is going to give you a reaction from that specific level. So I am expecting lower run this week where it can reach to that weekly fair value gap. Why to that weekly fair value gap? Because above this weekly fair value gap, I don't see any other level over here, nothing over here. So it has to reach over there from weekly expectation. I think until now everything is clear. My expectation is market is going toward that fair value gap this week. Now I'm going to daily chart. When I'm in daily chart, I can see this is the weekly order block, weekly mean threshold. Okay, now I can see this is the last fair value gap, daily fair value gap. This is the last daily fair value gap. This last daily fair value gap is holding the price. Nobody close above the daily fair value gap. It is giving me the confidence that market is actually going lower. Before taking that buy side liquidity, it is going lower. Now, when I will start to think market is going to take that buy side liquidity, if I see market went higher, closed above this daily fair value gap, the best scenario is it will go above that swing high and it will close above that swing high, the body. Okay, then this high is broken actually. If I see market closed above that swing high, that will tell me that no, market is not coming here. Instead of that, market is going toward that buy side liquidity to take that buy side liquidity. Okay, now from weekly chart, as I told you, I'm expecting market will go low where it is coming here to that weekly fair value gap. No, from daily chart I can see another level over here, that is volume balance. This candle high and this candle opening, this is the volume balance. There was no body, so I am expecting price will reach to that specific volume balance at least. Then I will start to think I mean, I would love to wait for more information that market is actually coming here to that specific weekly fair value gap. That is different matter. But before coming here, market will reach to that in volume balance at least. When it will come here, if I see it is actually holding the price, I'll start to think, okay, it doesn't need to reach that weekly fair value gap, because from monthly chart I'm expecting price will come here. So from lower time frame, the daily what to say, volume balance is actually holding the price. Excuse me. So this volume balance is actually holding the price, is going toward that buy side liquidity. Right now I'm thinking market will come here, just this volume balance, how it will come here directly, it will fall? No. Expectation is it will do the accumulation in Monday. In Tuesday, it will take that buy side liquidity. Wednesday, it will expand lower. Thursday, it will expand lower. Friday, it will come back again into the weekly range. This is the expectation from dollar index. I will go to 1 hour chart. From 1 hour chart, you can see it reached. This is the mean threshold level from the month weekly chart. Remember, this is the mean threshold. This is the order block. This is the daily fair value gap. Price came here, it came lower, tried to take that high one more time, failed. Then it went lower. What it has made here? Relatively equal lows. That low and that low. They're relatively equal lows. What is that? Sell side liquidity. I'm expecting market is going to take that sell side liquidity at least from hourly chart. Then it will reach to that hourly fair value gap. This is the hourly fair value gap from hourly chart. So it will take that liquidity. It will reach at that fair value gap, hourly fair value gap. When it will reach here to that hourly fair value gap, I will read the price again. Is it going to hold the price, or it is broken already? If it is broken, there is nothing left that can hold the price to reach to that volume balance from daily chart. Remember, this is the daily volume balance. So there is nothing that can hold the price to reach here. But if I say it is holding the price, then I will look for some buy side liquidity first. Then I will stay like that way. Every single day is different. Every single day's bias is different. Okay. From weekly chart, my weekly bias is downward. From daily chart, I will look for every single day's narrative. From hourly chart, I will decide that my daily bias is correct or not. Right now, am I thinking market will fall here? No, I'm not thinking like that. I'm thinking market will do some kind of accumulation, or it will make some kind of buy side liquidity first. In Tuesday, it will take that buy side liquidity. Wednesday and Thursday, that will be expansion toward that sell side liquidity. I forgot to add something actually. Before starting your analysis, you have to go to your calendar. Okay, I love to see Forex Factory, but if you want to use another calendar, you can use. But for me, this is the best calendar. And from here, you will see where is your news, actually high impact news. You can see in Tuesday we have a news at Richmond Manufacturing Index. This is medium news, medium impact news at 10 a.m. I don't care about that. Wednesday and Thursday, okay, we have high impact news at 9:45 and 8:30. So this is the time when we will get the expansion. Okay, and Friday we have another, I mean, core PCE price index. I really don't know what that news is, and also the pending home sales something in Friday. So in Friday also we have the news. So in Wednesday and Thursday, I'm expecting the expansion. Okay, so in Tuesday, I will expect some kind of manipulation. Wednesday and Thursday, expansion toward that sell side liquidity. Simple one. So I think in short, you have got the analysis from dollar index. If you are still confused, please after the streaming watch the first part. From this streaming, I have explained everything over there more. I mean, descript way. I mean, what is that word? I mean, I explained it more. Okay, I don't know what to say. So I guess that's enough then. So where I was in GBP USD. Okay. Please don't forget to give me a like. I just want you like, nothing else. So from the GBP USD weekly chart, I can see market failed to reach to that, what is the monthly fair value gap. Okay, this is the monthly fair value gap. The price failed to reach here. Right now, where is your price? This is your price. What you have buy side liquidity. See this high and that high, they're relatively equal high. So all of this area is your buy side liquidity. What do you have below the market? This fair value gap, and this all the breakaway gap from weekly chart. This is the breakaway gap. Let's come to this first fair value gap. See, it has traded that fair value gap. It went higher. It failed to take that that high. It has made another relatively equal highs. What should price do now? Should it go lower first? I don't think so. It should take that liquidity first. Why? You don't see any liquidity here. This is plain liquidity. So what market should do? Market should take that liquidity first, because below the fair value gap, it is already traded. It has been traded over here. There was relatively equal lows here that has been taken already by that candle. Can you see it? That was the relatively equal lows. Okay, by that candle, it has taken already. What left? Only the buy side liquidity. So it should take that buy side liquidity. Then we will see if market would love to go lower or it would love to go higher. We will see that later. But right now, what is more obvious? This is the more obvious for buy side liquidity. Among there was a monthly volume balance in dollar. I guess you are talking about this one. I guess, I mean, this volume balance. I guess you are talking about this one. I saw this, but actually, when from weekly chart, I got this order block that is more obvious. I mean, comparing with this volume balance, this order block is more strong. Okay, now this is another conferences. I mean, you can get the conferences that reaction you are expecting. You can get that reaction from that volume balance. Yeah, obviously you can expect that, but as of me, I can see this candle is more strong, and I am in weekly chart. From weekly chart, it's enough for me to understand that market is actually reacting toward that I mean, from that order block level. Okay, I really, I mean, if you are unable to mark the order block, obviously you can mark the inverse. I mean, that volume balance. Obviously you can mark it. Okay, there's nothing wrong with that. All I'm saying is this is for me. This is easy for me. The water block level, marking water block level, that is easy for me. So I'm just marking them. But the way you will think it is easier, you will just go for that. There is nothing wrong with that. Okay, brother. So, okay. So here, well, what I was talking about, market is going toward that buy side liquidity. Can market go lower? Obviously it can go low. There is relatively equal lows. See this low and that low, they are relatively equal lows. Market can obviously go toward that lows. But if you ask me, what do you want? Gun to my head, I want to see this. This is for sure for me. Okay, I would love to see this thing happen this week. I'll go to daily chart now. So from daily chart, this is the daily chart. I didn't see the market before, so don't think that I have already done all the analysis. No, I didn't do anything. This is the first time I'm coming here for the dollar index. So you can say, I mean, so not dollar index, in GBP USD. So from here, this is the weekly fair value gap. Prices traded that weekly fair value gap perfectly. It went higher, it went lower. Where did it came? This daily fair value gap. Let me mark the daily fair value gap. This is the daily fair value gap. Now you can tell me, brother, it's broken. No, this is fake breakout. I have explained you what is fake breakout already. Okay, fake breakout is one candle will go below the daily, I mean, below the fair value gap. The very next candle, it will come back again inside the fair value gap. That is fake breakout. See, there is no body instead. I mean, instead of that one, there is no body. Yeah, we can go little lower. We can obviously come here as well. I don't care about the week. I care about the body because body tells you the story. So, and instead of that two body, there is no body. That means I can easily expect this is fake breakout and this daily fair value gap is actually holding the price. When it is holding the price at the same time, market has taken all of this liquidity. See, there was a lot of liquidity over here that has been taken by that candle. Now this is shallow run. Remember what I told you about the shallow run. If you see this shallow run, market is going to take that for sure. But before doing its unfinished business above there. So over here, I can see another relatively equal highs. That is another buy side liquidity. Okay, over here. So this high and that high, they are relatively equal highs. So you can ask me, brother, why you are marking those highs from daily chart? Just this high, you are not going for a relatively equal highs. If you just go 1 minute chart, you will see how clean buy side liquidity over there. Very clean buy side liquidity. Okay. Right now price is over here. I'm expecting price will take that buy side liquidity. Then finally it will take that buy side liquidity as well. Now it is going to take that buy side liquidity or not. I don't care about that. I want to see this is taken. This should be taken. Okay. At the same time, when it went lower, I mean, no, just let it go. I mean, that will be confusing information. So I don't want to explain that one. Okay. Just let it go. So right now I'm thinking price is coming here, that buy side liquidity. Now it will go directly over there. I don't know. Same thing, accumulation, manipulation, distribution, and then it will close here somewhere. This is the expectation from here. I'll go to 1 hour chart. So from 1 hour chart, so many things over here, man. Okay. So from 1 hour chart, you can see market has taken the liquidity from there. Remove this one. Remember, this is the daily candle. So it has taken the liquidity. There was the relatively equal loss, very clean loss. I told about the shallow run. This is that shallow run. So that will be taken later, not now, later. Price come here to that fair value gap. That was the entry fair value gap. It come here, it went lower, it failed to go low. Now at the same time, it has make, I don't actually go with this trend line liquidity. Never I went with that trend line liquidity, but for your understanding how it react actually. So this is kind of trend line liquidity. In Monday it can make some kind of accumulation phase, then Tuesday it can take either this trend line liquidity or it will make some liquidity first from Monday, then in Tuesday it will take that sell side liquidity. After that the expansion. Okay, where is the expansion? See this high, remember this high, I'll just remove this one, this high and that high from daily chart. This is the buy side liquidity. Above this buy side liquidity, this is the extreme buy side liquidity. Right now this is the buy side liquidity from daily chart, just two high one after another. This is that high. Before that high I have this buy side liquidity, same relatively equal highs, relatively equal highs. How many buy side liquidity do you have? 1 2 3. You have three buy side liquidity. Prices over here, it has taken the maximum sell side liquidity. Now it is going higher, it is making some liquidity, maybe it will take that liquidity, then boom, toward that buy side liquidity. That is the extreme one from weekly chart. I will go until this buy side liquidity from daily chart. Okay, so this is the from daily chart buy side liquidity. So that is my expectation from weekly chart. Why I'm expecting higher run, I have already explained that. How you will do it by yourself, that is your problem, your thinking. How you will do that by it by yourself. Okay, so next week you will do it by yourself first, then you will join to my live, then you will tell me, brother, you are doing that wrong, you didn't mark that thing, you should do that. You will do that. Okay, you will tell me when I will mark something and I am not going to mark something. Then you will tell me why you didn't mark that one. That is important, why you didn't do that. I will learn from you as well. Okay, I'm here for learning, I'm not here for teaching. I'm here for learning from all of you. Every single person you are here, all of you, 1,000 times better than me. Trust me, you have to trust that. Until you don't trust it, you are not going to be profitable. So you have to trust that you are the best. Okay, you are the best. What you don't have, that is your experience. Maybe you are very new to this concept. That is why you are little confused that whatever you are doing, is it right or is it not, what to say, the wrong. Okay, so please just do it by yourself and then come back to me and tell me I'm wrong, I'm right. So everything is done. I think gold should be the last one. Okay, let me actually remove these things. So many line, man. Just let me remove everything. Here I have only the sell side liquidity. That's cool. Look gold, please. Okay, yeah, man, I'm here, man. So from here, just let me mark the level first because I didn't see the gold. It has taken the liquidity from there. It went the higher time. I mean, highest high. Oh man, this is the very difficult time for the gold. From weekly chart, I can see a second. Okay, I'll keep it on my chart. That's why I'm just doing it for one time that I can keep it on my chart. Okay, uh, now for gold. Okay, what is the prime difference between repricing and rebalancing? Limited edition. You have to watch a video, brother. I'll just let me go over there and please watch this one. You'll understand what is that. What I told you about that. Just watch this only this video because I have already uploaded that. So I don't think so. Better or it's uh, 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 uh. For sure and trace that video when I guess this is the video balance price range. Uh, can you please watch this video from study section? Balance price. I think so. Okay, this is the video. If you don't get the information from there, why do you need the balance and imbalance price range? Just watch these two video. I guess your concepts or your doubts will be cleared by those two video. Okay, so yeah, so far I remember that all two video. Please watch those two video, please, man. You'll understand what is repricing and what is balancing. And trust me, whatever I explained over there, you can't match it with others, okay? Because whatever I am telling you here, that is my rules. I see the price like that way, so I get it from ICT. Don't even think that that is my concept. No, that is not my concept. That is ICT's concept, okay? But I actually make it more shorter and more obvious. That is the difference. Okay. So let's go to gold. Gold is always difficult. I have tried gold to trade in one time in my life, and I got lost. Okay, so after that I stopped taking entry to gold. I never trade gold to my live account, never ever. Okay, after that. So far you can see I have very clean sales and liquidity here. Okay, that low and that low. They are relatively equal lows from weekly chart. I have to explain it from very beginning. Okay, because this is also very new for me. So I have to explain everything from very beginning. This is the last parallel gap from weekly chart. This is the relatively equal lows from weekly chart. Above that, I have this breakaway gap. What market has done? It has taken this sell side liquidity, market structure shift. This is the first parallel gap. This is the entry gap. So market came here to that entry gap. It went higher. Where did it go? To take all of this buy side liquidity. Okay. When this is taken, all of this buy side liquidity has taken. What should you do? It do now. It should go toward that sell side liquidity. It should go toward that sell side liquidity. Now, before coming here toward that sell side liquidity, it has to reach this breakaway gap first. When it will come to that breakaway gap, I will observe the price, how it reacts. If it is going to fail, hold the price, or it is actually, I mean, holding the price and send it back. Okay, I will observe the price here. Now, when it has taken that buy side liquidity, it came lower. Where did it came? To this water block level. This is another level. After trading the fair value gap, this is water block. Okay. Now, when I will make the sequence video, you will understand why this one is not water block and why this one is water block, why this mean threshold is important, and everything. Okay, because I won't talk too much about water block, but you will understand when you should look for a water block and when you should look for fair value gap. You can see this water block is actually holding the price. See how beautifully it is holding the price. Now when it is holding the water block, I will expect some reaction from here. Okay, I need some reaction. As it is holding the price, I need reaction. What does it mean? The reaction will take the huge high? No, I don't think like that way. What I have seen, I want to see is some kind of reaction that will take some buy side liquidity. Now here this is the last swing high, but there above that swing high I have the consequent encroachment of that week. Okay, so these two level is perfect for giving me the reaction, getting me the reaction. So if this order block is going to give me the reaction, it should reach to that level or that level. Any of those levels should be taken. This is my expectation. I am not expecting this high will be taken. If this high is taken and body close above that high, I will start to think market will go higher. In that case, I will use the standard deviation and the fib tool. Okay, this thing. I will start standard deviation until my max is 3. The max is 3, but most of the time market go to 1 minus 1.5. So I will use the standard deviation to find out how long it can go. If I see a body close above that high right now, until I mean from here, I'm expecting this week that high will be target, or if it overzealous, then it will reach to that consequent encroachment. Remember, this is a very strong resistance level. Okay, if market can break that consequent encroachment, that is 99%, you will have to be sure that market is going to take that high if this fail to hold the price. Okay, so this is the expectation from weekly chart. Now I'll go to daily chart. Okay, so from daily chart, I mean, so many lines, I'm extremely sorry for that, because I mean some days ago I have traded over here. So I just need to mark it. Okay, so I can see I have this very nice buy side liquidity. All of these swing high are related, I mean, situated at the same place. At the same time, market came to this last fair value gap from the daily chart. This is the last fair value gap. Okay, this is the weekly water block, weekly mean threshold, water block mean threshold. Right now, prices traded this daily fair value gap, and this daily fair value gap is holding the price. At the same time, you can see it is actually inside that fair value gap as well. So this is also the daily fair value gap. So we actually see the slopiness over here. I guess so. We are going to see the slopiness over here as both of the fair value gap is actually holding the price. I guess we are going to see the slopiness. But what I can expect is market will go little higher, then it will come back again to this order block level. Okay, it will come that order block level, then it will expand higher and it will take that buy side liquidity. This is the order block level. Don't forget, this is the order block from daily chart. Now this is the weekly order block, weekly mean threshold. From daily chart, this is the daily fair value gap, daily order block, daily buy side liquidity. This is weekly consequent encroachment, weekly candle, weekly high. From here, this is the daily chart. This is relatively equal highs. This is the daily last fair value gap. It holds the price. The last fair value gap here, it is also holding the price. What I want to see in Monday, some kind of consolidation. Tuesday, it will go lower, maybe little lower to the mean threshold of this order block. Let me mark it, because later when I will come back here, I will understand why I marked them. So that is the 50% of this daily order block. It can reach to that mean threshold as well, no problem with that, but until the body close below the mean threshold, I'm okay with that. If wick go lower than mean threshold, no problem, but body can't go below the mean threshold. So it can reach either the water block or the mean threshold in Tuesday, okay, not before Tuesday. Then it will go and take that buy side. That is my expectation. After taking the buy side liquidity, there is another water block. See over here, I I guess that will hold the price. If it fail to hold the price, it will take that buy side liquidity. If it can take that buy side liquidity and a body can close above that high, this is more obvious. The price will reach over there. So everything is one after another. Okay, this is the sequence. You have to think like that way. There is no chance to think market will just go and it will go until there. No, you can't think like that way. Now you can ask me why I am not expecting lower run. The only reason is, you can see the weekly, from the weekly chart, when it has taken all of the buy side liquidity, what it should do, it should just expand lower. Okay, it doesn't need to stay here, it doesn't need to consolidate here. When it is consolidating here, at the same time it is actually respecting this order block, I'm expecting some higher run first. After giving me the higher run, it will expand lower. That is why I'm expecting higher run instead of getting, instead of the lower run. From daily chart, you can see the last fair value gap is actually holding the price when market was falling. This is the last fair value gap from daily chart. So it is actually holding the price. It went higher, though it came here to this daily fair value gap. I would love to see this will work as inversion fair value gap. I would love to see that. Okay, I am not sure it is going to do it or not. What do I mean by inversion fair value gap? It will come here. It will use this fair value gap as a inversion fair value gap, then it will go higher and it will take that buy side. That is my expectation. mm, okay, maybe stupid question. What is that stupid question? Okay, let me actually read your question. uh One is, after MSS and trade a fair value gap, this then create order block. Just from my observation now, on why you mark that candle, this one, why I have marked this one, because it has traded this fair value gap. This is the order block. If I go to weekly chart, it has traded this fair value gap. Okay, sorry, here you see price come here, traded this fair value gap, then this is working as a order block. From daily chart, market went higher, it has traded this fair value gap, daily fair value gap. This is the lowest swing. It has traded this daily fair value gap. Now this is order block. When market will close above the opening of this candle, when market will close, okay, see where did it close? Above the order block opening. When it has closed above that level, it's gonna be your order block. Is it clear, brother? I mean, order block is order block, but whatever. But oh man, don't force me to talk about this, because this is kind of controversial one. You will get so many YouTubers, they will explain the order block, okay? But the thing is, I don't get precision, and I don't want to talk about this. You are going to get the order block theory from ICT's book very soon, and when he will published his book. I promise you, brother, I will clear the water block theory to all of you, and you will never be confused about the water block. Not anymore. This is not water block. This is not water block. This is, yeah, this is water block. There is some sequence, okay? You have to follow the sequence, okay? That's why I told when I will upload the sequence video, you will understand when the water block create. Why this one is not a water block? Why this one is water block? It is down close candle, big run, parabolic gap. Then why it is not water block? Why I'm thinking this is water block? So you will understand that thing, okay? Why this is water block? Because it has traded this candle. I mean this week. See this week, the consequent encroachment. This week is parabolic gap. Don't get confused, okay? This is parabolic gap. I have already talked about this. This is the parabolic gap. It has traded this parabolic gap. Now you can ask me why this one is parabolic gap. This is just a week. No man, this is not a week. If you just watch ICT's video, you already know the week actually works as a parabolic gap. The 50% of the week is consequent encroachment. Same 50% of the parabolic gap. So every week is actually the parabolic gap. This is the parabolic gap. Markets see this as a parabolic gap. Okay, don't get confused. This week is different with other weeks. Why this week is important? That is also another concept. Okay, I mean so many concept over here, and it's nearly impossible for me to explain everything by one day or 1 month, maybe 6 months. It's really impossible, man. This is the parallel gap. I mean, this is the week which you have to mark as your parallel gap, not this week. This week consequent encroachment is not important for me. This candle's open is, I mean the highest body close is important for me. Why? Because that is the rejection block. This is not your rejection block. See, I mean here. This is not your rejection block. Your rejection block is here. This is your parallel gap. This consequent encroachment is important. If I find something else. Here, this is the rejection block. I'm not looking for the constant encroachment of that week. I'm not looking for that. Okay, here only the important thing is the rejection block. And at the same time, just look, this candle, okay, it has taken this buy side liquidity. It has made the relatively equal highs at the same time. That is the reason it is not like the consequent encroachment of this week is not important. But here it is important because though it has taken cleared all of this liquidity, buy side liquidity, but it went too far, just to the rocket, okay, to the sky. I mean, man, I will get mad, man. I mean, I guess slowly but definitely you will understand. Okay, there is something. Uh, Slowly but definitely you will get it. Okay, this is the why. This is water block. It has traded this parallel gap. This is perfect parallel gap. I mean, the best parallel gap over here. The constant encroachment of this parallel gap is more important. This is the strongest one, as I told you before. The constant encroachment of this week is much more important. Very strong. Very, very. So here is the hourly chart. So many lines. I'm sorry for that. I didn't see this one, and I had no intention to talk about this. I was thinking that I was just close after NQ, ES, and Euro USD. So I'm extremely sorry. So right now prices over here from hourly chart, and you can see constant encroachment of the upper fair value gap, perfect rejection. If I see this perfect rejection, I believe that market is going to take that. Okay, this is kind of my thinking. And if you see, it has taken the sell side liquidity, market structure shift. This is the first parabolic gap, so that should be the entry gap. It should work as the inversion, I mean the breakaway gap. Market should went higher, where it should take that buy side liquidity. Okay, at the same time, this is your order block. Just let me mark it. This is your order block from hourly chart. It should react something. That means from uh, Monday it will accumulate something, then it will take that buy side liquidity, or it will take that buy side liquidity. That is different matter, no problem. After that, in Tuesday it will take that sell side liquidity. Then Wednesday and Thursday, this is your pure buy side liquidity from daily chart. At the same time, I believe before Wednesday and Thursday it will make some hourly, what to say, hourly liquidity as well from here. Okay, yep, yep, yep. That's cool, man. That's cool. Too many information in one place. Okay, brother. Now rejection block. Please explain more. This is deep knowledge. But rejection block, I have already uploaded the video. You just watch that video. I mean, though I have, my friend ICT Pro Trader Path, there was something happened between us, so I get angry and I have made clear what is rejection block is. Okay, so you can watch this one, rejection block, then you will understand perfectly from ICT's video, ICT's explanation, ICT's everything. Okay, I just explained it briefly so that you can get a perfect idea about the rejection block. And first I have actually decided to explain every core content video from ICT. Then I decide not to do it because then I will get more hated person. Okay, so you can watch this video about rejection block. You will get it from study. Okay, from my playlist study. You will watch this video rejection block misconcept as cleared from ICT explanation. So whatever I talked about here about the rejection block, I talked according to ICT's explanation. I just make it more clear, more specific with some more rules. So please watch that video. I guess rejection block concept will be clear, brother. So here the dollar, I have already explained the dollar. I guess it's done for today. I mean, there is nothing left. No, nothing left actually. It's been a long time. I mean, near about 2 hours now. I'm just speaking. I'm just talking. Let me check how many likes I got. 23 likes. If anybody missed the like, please don't forget to give a like. Okay. I'm a good guy. Okay. I'm a humble guy. I'm not a rude guy. And don't think this guy shouldn't deserve a like. I deserve a like. I'm telling you, man. I deserve a like. So please don't forget to give me a like. It will help me to YouTube algorithm or something. So new people will know about my channel that this guy is doing something rubbish that will maybe help them. If you think it is helping you, then I guess you should expect somebody else should get help from here as well. Okay, and anybody is here uh, new, then please subscribe to my channel. Though I mean it's done about the price action. Okay, can we talk something else outside of the price action? You don't mind actually. Then I got 3,123 subscriber. I mean one week ago there was 3,000 subscriber, and now I got 123 more subscriber, and day by day it's actually increasing. The thing is, I'm I'm just surprised. Okay, to be honest, but I'm surprised because I never thought I will have this much subscriber. I told this before as well. I never thought about that. Now every day I'm just thinking, oh no, I'm not that much good that people are actually subscribing me. I know nothing about price action, but that is your kindness that you are subscribing to my channel. You are being my family member. I don't know what to say, and especially Music Life and George Camadio. George, I don't know, George, you are here or not. Thanks to both of you, man, for being the member. I mean, paid member to my channel. Thank you very much, man. I really appreciate it, and I really appreciate, man. I really appreciate. Okay, so thank you, man. Thank you very much. Okay, whatever. Overall, I'm really happy with my channel. Though it's, I mean, for you maybe it's very little. 3,000. Why this guy is just telling he's very happy, but he has only 3,000 subscribers. But it's huge for me, man. In my family, I have 3,000 people as my brother and as my sister. Okay, that's a huge for me. Any psychology tips and courage you can tell us, Ravi, about the psychology? Don't let me go over there, okay? If I start to talk about psychology, it will be overnight. I mean, the night will go on, okay? Here, 5,514 followers from my Twitter. Oh man, how do you actually, how do you bear me? I mean, I tweet a lot. Okay, I tweet a lot. You should. Oh man, it's huge, man. For me, it's a huge achievement. Okay. Uh, hey bro, can I send you my weekly analysis to see it have any correction? Sadam Danjuma. Sadam brother, I have already explained the my weekly analysis. I guess you can compare it with yourself, but even if you are confused, then you can send me the message to my Twitter. Okay. I mean, you can come here to my Twitter. You can send me the message. Okay. I guess I'll check it, but not promise today or tomorrow, but I will do it. Okay, before tomorrow I will do it, and I will let you know if I see anything wrong over there. So no problem. You can send me the message or screenshot. That will be easier with brief discussion. You can message me. No problem, brother. Profitable नहीं तो मैं भी ले what to say? Prof no man. Oh man, I was just showing that because I get, I mean, the membership things, George Music Live. I mean, I have nothing to tell about that except those people. They're really. I'm not saying that please do the membership or something like that. I'm not telling that. Okay. I'm not saying that this be the membership. I'm happy for these two people. They are. I mean, what to say? I really don't have any word to say, but it doesn't mean you have to do the same thing. Okay. It doesn't mean it. The thing is, these guys are from very beginning with me. Okay, from very beginning. Okay, there are some people who are with me from very beginning, and those are, I mean, these two people are also, I mean, inside of those people. Okay, so I really appreciate them for their helping. I mean, their helping, their helps, their courage, their inspiration. I really appreciate them. Okay, so that doesn't mean I'm telling you or any other people please subscribe, I mean, be the member. No, not like that way. Okay, I don't know how to say it, but I just see that and I should appreciate them. I did it. That's all, man. So don't take it in other way. No problem. And about psychology, you have to make a rule book. Okay, you have to buy a notebook and you have to write some rules over there. If you are really very much, I mean, if you are very serious, okay, if you are very serious, I mean, extremely serious about the trading, the first thing you have to do is you have to buy a notebook where you will write some notes, some rules before even starting learn about the price action, before doing anything, before opening your chart, before doing anything. You have to buy a notebook and where you will start to write down some rules. Without rules, you are going to be the loser for forever without rules. If you ask me what's the first rule, when you will understand the price action, the first rule is stop taking over trade. What do I mean by that? In Monday, I take one entry, that is winning entry. Just close your chart. No more trade for that day. In Tuesday, I take an entry, that was the profitable entry, winning entry. Close your chart. Don't take any more entry. Wednesday, you take an entry and that is a losing entry. Now, at the morning session, you take an entry that is a losing entry. Close your chart for the morning session. No more trade for morning session. Come back in the PM session again. Try to mitigate your loss. If your loss is $500 from morning session, you will go for $500, not more than $500. That's forbidden. You have to stop when your $500 is mitigated to the PM session. Not even you will try to the AM session. If you do that and you take another loss from the PM session, close your chart. No more trade for today. Come back very next day, Thursday. Take another entry to the morning session. You take another loss. Close your chart. Come back again PM session. You take another entry. That's the winning entry. Close your chart. Don't target huge or unlimited. Don't ever think nobody can be the millionaire by one trade. Nobody, simply nobody can be the millionaire or billionaire by one trade. What you have to do is you have to mitigate your loss. You have to save your equity. If you can do that, you are already profitable. This is the first rule for the trading. This is the first rule for your psychology. Do you know every single person, if you just gamble over here, just you will gambling, you don't know anything about the price action, you will just gamble, but you will be strict. Every day I will take one entry, that will be 1:1. I mean, you will just hold the from Nasdaq only 10 handle. Okay, only 10 handle. If you can get 10 handle, you will close your chart. Every single day you will come to this market, you will gamble. One trade, one day. After taking the trade, you can't open your chart. You can't do it. You have to close your chart. 1 month. Come back after 1 month. That means 20 days. After 20 days, come back to me and tell me you are profitable or you are a loser. You will be the profitable trader. That's me, brother. I did this by myself. I just gamble. Okay. Every single day I come. I take one entry for 10 handle. If I take a lot, I mean 10 handle, just I take entry, got 10 handle, close my chart. Come back again 10 handle, take a loss for 10 handle, close my chart. Come back again 10 handle, winning, close my chart. At the end of the month, I am the winner. Just for gambling. Now, if you know how to read the price, if you know where price is going, if you know your daily bias, if you know how to take your entry, which fair cap you are going to take your entry, which when it is going to make a water block, where is your breaker block, if you know everything, now you are not gambling. You are just taking your entry depending your price action. There is much more possibility you will take. I mean, a small losing entry, maximum winning entry. What you have to do is you have to close your chart after the trade. You can't expect you will take your entry here and you will close here. You can't do it. You have to expect when market started to go higher, I will enter market from here. Look at my closer, okay? Just over here. You will take your entry here, you will close it here. So this is your run. You are not going to take your entry here, you are not going to close your entry over there. You will take your entry here, you will close it here. Why? Because that is obvious. Market should take that one. But brother, there is more liquidity, very clean liquidity. I mean, every single person knows that market is going there. Why I am not going to hold it until that? If you do that, that that means that tell you that you are greedy. You are very greedy. You know, when you take the sell side, I mean entry, okay, you have taken an entry, buy entry. You know, this is more obvious. Market can take that low before expanding higher, but if you put your stop loss over there, you are going to hit maybe $500. So what you are doing, you are thinking this is the more obvious level, I should put my stop loss over there, though this is more obvious. I mean, this is very clean sell side liquidity. Then what market do? Market come here, then it went higher before stopping you out. Okay, now you are very happy. Why? Because you are right, though it was very clean, very obvious, but as if you put your stop loss over there, that is huge stop loss, so you put it in here depending on the water block bin threshold, and market didn't hit you. Instead of that, it went higher and it hits your target profit. You are happy here. Why did you put your stop loss over there? Not here, because that is huge stop loss. When you are going to mark your target profit, you are going for the huge target profit. This is the first barrier. Okay, what happened actually? If you take your entry over there and you are thinking market will go here and it will take that buy side liquidity, you take your entry here, you are holding your target until there. What market did? It was very near to your target profit. Then it started to go lower, go lower, go lower, and you stopped out over here. That means your winning trade turns into your losing trade. What I do? I take my entry here, I target here. At the same time, when price come here, I take my partial. I just take my partial, I put my stop loss to the break even. I let I let go the rest of the contract. Either it can take that high or it will hit me to the break even, I'll be happy for both of that cases. If it can take the liquidity from there, I'm more profitable. If it hit me to the break even, I'm not a loser. I have already taken my partial over there when it went above that high. But brother, that is very small run. I don't care. Still, I'm profitable. If I was right, then market could go and take that basic liquidity. But I wasn't right. That's why market went lower. But brother, I got stop loss to the break even. But if I put my stop loss to the place I put it first, it never reached there. But instead of that, it went higher and take that buy side liquidity. So why I will do that? There's two things. First thing, you really don't know when you should put your stop loss to the break even. This is the first thing. The second thing is you shouldn't be frustrated that you didn't get the liquidity from there. Still, you are profitable by your partial and you got stopped out to your break even. So you are still profitable. How much do you need, man? Every single day, if I give you 1 billion, you will start to think, no, man, 1 billion is not enough. I need 10 billion because maybe Bill Gates is earning 1,000 billion in one day, for example. Okay, so I need more $1 billion in one day. So there is no limit. All we have is greediness. Until you are greedy, you are the loser to this market. Why I'm not holding my trade until there? Why I'm closing there? Because that is more obvious. It's a very small run. Maybe 20, I mean 25 handle, maybe 30 handle, maybe 40 handle, but very small. I'm happy with that. I don't need 100 handle by one trade. I don't need it. I will take 25 handle from here today. I will come back tomorrow. I will take another 25 handle. I will keep continue earning 25 handle. This is psychology, man. Everyone will tell you be patient, be patient, be patient for the perfect setup, be patient for the perfect setup. No, no, that is not right. You have to be hurry because when you are enter into the market, that means you have entered into a forest. Forest. Okay, in that forest there is tiger, there is lion, there is maybe some other dangerous animal. They can kill you, man. Anytime they can kill you. So at your first time when you will get your chance to get out of that forest, just go out from that forest, just go out from there. You are in the river. Okay, you are in the river and that river is full of crocodile. What you have to do, as soon as possible you can get rid of that river, just get rid of that. Entry can be anytime. The main theme is when you are going out from that entry. That is important because when you enter, already you are in danger. So just let why you are keep wasting your time inside that danger zone. Why? Because you are thinking if I can stay here, maybe I will get more. More bird to. Whatever you are here. Okay, just for example, you enter into the forest for the honey. Okay, for honey, bee honey or something. So you are entered over there and you are waiting. Okay, can I get more honey from this forest? But you are not thinking so many tiger, lion, they are actually watching you. They are waiting to hit you. You are not thinking that. You are just seeing the honey over there. That's why you are getting killed. But if you think, I just enter, I got some honey, let's get out from the forest. I'll come back again tomorrow. I'll try one more time. Again one more time. You will never be the loser. Never ever. Don't believe me? Do it by the paper money. Just go to this paper money, make it not over there, sorry. I think yeah. Just make it $2,000. Okay, just make it 2000 because the top step combined their 50K account actually let you take maximum to $2,000. Okay, just reset it by $2,000. Try to trade for 1 week, whatever I told you. Just go for maximum 20 to 25 handle every single day. One trade, one day. If you take a losing trade in the morning session, wait for the PM session to mitigate your loss. If you take your losing trade to the PM session, just close your chart, wait for next morning. Just do it for 1 week. Then come back to me and tell me it works or not. You are profitable or you are the loser. This is psychology, man. Psychology, we people are greedy, okay? We are always greedy. And until you can't control your emotion, what is emotion? Everyone will tell you, please, please control your emotion, because if you can't control your emotion, you are not going to get anything from this market. What is your emotion? Your emotion is your greediness, only greediness. Your fear. Market was here. You fail to take your entry over there. Okay, so market went higher. When it just gave you another chance to that fair value gap, you are taking your entry over there. Why? Because you missed it, and now you're thinking market is going higher toward that liquidity. You take your entry there, you put your stop loss over there. That is your target. What market has done? Boom, you're stopped out. So you missed it. Now you are forcing market to give you an entry. Or why is that? Because you are fear of losing, I mean missing that trade. You are just fearing. Why you are fearing? Because you know when you should take your entry. Why don't you know? Just let me go over there one more time, okay? I know I'm just talking too much, but as one of my brother actually told me to talk about this, I'm just talking about this. I will just talk about here, the price action over here. Why you are fearing, man? Why you don't know then when you should take your entry? What I told you, when you open your chart, the first thing is look for liquidity. Okay, just think of this price action. How do you mark your liquidity? Do you know how do you mark your liquidity? Yes, brother. Obviously, I know how do I mark my liquidity. How? Relatively equal highs, relatively equal lows. Go with them. Just go with relatively equal highs and relatively equal lows. That's all, man. I don't know. Can you hear me or not? Okay, can you hear me, man? Just let me know that you can hear me or not. I'm not going to waste your time. I'll just complete my session after explaining little more psychological issue. Okay, because today the market is closed, so I can talk about this thing. Okay, as I didn't want to talk about that, but the guy Mayank actually, sorry, I think Ravi actually told me to talk about the psychology, so I started to talk. But before that, please let me know that you can hear me or not. I guess there's some problem. The internet issue, I think. Can you hear me, brother? Sound perfect. Okay, Ravi, thank you, brother, thank you. So, what I told you about the price action, when you have opened your chart, what should you look for first? The first thing is your liquidity. Where is your liquidity? I can see relatively equal lows here. This is for example, okay? I'm just using this one. You have this liquidity and you have those liquidity. They are relatively equal highs. Very simple thing, okay? And finally, it has taken that high as well. So I'll just mark that on as well over here. So from 15-minute chart, you have seen you have this sell side liquidity, you have this buy side liquidity. Okay, what market has done? Market went higher. It has taken all of this buy side liquidity. What left? You have this sell side liquidity. That left. Market came here and made relatively equal lows. Now market is going higher. This is from 15-minute chart. Market is going higher. Where it is going actually? Do you have any idea? I told you, just look for the last parallel gap. Why is it? Just look for last parallel, nothing else. So here is the last parallel gap. Just mark it. When market will come here for the first time, go to your 1 minute chart. This is your 1 minute chart. So this is your last parallel gap. You have come to your 1 minute chart. Okay, you come here. What you should look for? You should look for it will take some buy side liquidity, then it will give you a market structure shift. That's all you should look for. Okay, let's see it worked or not. Okay, it came here, it didn't take the buy side liquidity yet, so it went higher. When it come here or maybe here, this is the first time it has taken the buy side liquidity, so it has taken the buy side liquidity. Is there any market structure shift? I have already explained how to mark swing low and swing high for shipping market structure. No, this is not market structure shift. Is there any chance to take sell? No, brother, there is no chance to take sell. Market is going higher. It came here one more time, it has taken buy side liquidity. Was there any market structure shift? No, man. There is no market structure shift. Wait, man. So it is, wait, I mean, just sloping here, sloping here. See over here. Can you see this is market structure shift? No, this is not market structure shift. Why this is not market structure shift? Because this is relatively equal lows. This is not swing low. This low, this low. They are relatively equal lows. Market has taken liquidity. This is not market structure shift. Market went higher. It has made relatively equal highs over there. It went lower. Am I going buy? Should I go look for buy? No. Why? Because 15-minute chart, I see I have liquidity, sell side liquidity only, not the buy side liquidity. So I'm not willing to take my buy. The price come here one more time. What it has done? It has taken all of this liquidity. Do I get any market structure shift over there? I don't think so. There is no market structure shift. Okay, no problem. Here, no any market structure shift. Nothing clear. Here, no. Here, no. Nothing. Nothing until now. Nothing. See, until here, I don't see any perfect market structure. Nothing. So price come here one more time. No market structure shift. Went lower. Still, I'm looking for sell. This is the first time I got liquidity taken. I mean, let me mark it from here. Okay. It has taken all of this consolidation liquidity. Everything is cleared from there. Okay. And then I got this market structure shift. This low shifted that market. Now, this is not the session time. I am just randomly picking a chart, picking my chart, okay, randomly. But if it is from your session time, you will get perfect setup over there. But I'm just telling you when you should take your entry. I didn't take my entry over here. Nowhere. I didn't take any entry over there. Market is falling. So what I told you, when you will see the run, you don't need to take your entry very bottom, and you don't need to close your entry to the top. What you have to do, you have to enter in a level where it is middle of that run. I will take my entry. This is market structure shift. Maybe this is first parallel gap, second parallel gap. Market come to this first parallel gap. Take your entry over there where you are going to hold your trade until this low. This is the 15-minute sell side liquidity. Are you going to hold your trade from until then? No, you are not going to do that. Then what you are going to do? Look for another last parallel gap from 1 minute chart. If you don't see any clean sell side liquidity over there, just look for the last parallel gap. Take your entry over there. Put your stop loss some level that is more obvious and go for that. Done, man. It's already done. You don't care about this big run. See it fall. Oh man, I missed it. You don't give a shit. I don't give a shit. It's very simple, man. It's very simple. The only thing is we are actually very greedy because we want to enter into our market here. Let me actually show it from 15 minutes chart. What actually we want to enter to our market here, and we want to close our trade here so that we can get the full run. This big run we can get it. Don't do it, man. It will hurt you. Trust me, it will hurt you. Just go for some specific level. Look for the setup from 15-minute chart. Let price run until that level. This is the last parallel gap. Let it run until. Why I am expecting lower run? Because I have sell side left. Buy side has already taken. I am expecting market will take that sell side. Is it going to take that sell side liquidity? I don't know. I don't need to know. I totally don't need to know it will going to take that sell side liquidity or not. All I want to see, it is going to take that relatively equal lows. When I am expecting a lower run, when it will come here to the last parallel gap from 15-minute chart. When it will be inside that 15-minute chart, I will go to 1-minute chart. I will start looking for the entry any place around that area until it has taken that sell side liquidity. I will look for that over here to that lower run. How do I know it is going to take that liquidity? It is clear, man. It has taken buy side liquidity. It should take that sell side liquidity. That is clear. Maybe it is not going to take that liquidity. Maybe, but this is more obvious. Obviously, market has to take that liquidity. So I will look for my entry until it is taken that sell side liquidity. Now let me remove this one. I talk too much. I told you. Okay. So what market has done over? Okay. It has made this low and that low. They're relatively equal lows. Okay. Just look at the precision. I am just telling you the precision over here. Okay. So it has taken all of the, I mean, it has made all of this liquidity. Now, when it has made this liquidity, it started to go higher. What are you thinking? Market is going higher. It has made liquidity. Though it has taken this liquidity, it has made another liquidity. If market after taking this liquidity, just from here, okay, let me just show it to you. Just after taking the liquidity, maybe from here, market started to go high. Then I will start to think maybe market has made this relatively equal high, so it is going to take that liquidity. No, what price is done that? Just look. You have to start talk with your chart. When you will start to talk with your chart, you will understand what price is actually doing. It has made the relatively equal loss. What does it mean? That means it's telling you, brother, though I have cleared some liquidity, at the same time I have made another liquidity. So I'm going to take that on. When it is going higher, don't get confused. I'm not going so high. I'm just going higher for retracement. When the retracement is done, boom, just taken the liquidity. The market is telling you that I am going to take that on. If I wouldn't go for low, then I could trade from there. I could go for higher from there. I didn't need to make relatively equal lows again. I didn't need to do that. I could reverse from there, but I have made relatively equal lows. I'm telling you that this is going to be taken. Where I'm going, just mark the last pair. Okay, just go for that one more time. This run, this is the last fair value gap. It didn't trade, right? Very clean. It didn't trade. Just go for another fair value gap. Why the second fair value gap? I told you about that. What I told you. After taking the buy side liquidity, market structure shift. This is the first fair value gap. This is the last fair value gap. There's much more possibility market will come to the first fair value gap, then it will expand lower. How do I know that? That market is going lower from that fair value gap, or it is going to trade that last fair value gap? 90% of the time, market will go to that last fair value gap. But when you will see it is actually reversing from there. It will send you the information. Market will tell you. You don't need to understand anything by yourself. Market will tell you that I'm going lower from there. It is going to tell you. Let's see. It actually tell you or not. Okay. So when market came here, what it should do? First, it has to take the buy side liquidity. Where it has happened? Here it happened. It happened. It has taken the buy side liquidity. Do you know it is going toward that last fair value gap? It is going lower. You are confused? Don't do anything. Just wait. Market went lower one more time. It tried one more time. Where did it close? To the this fair value gap. Why it has closed in that fair value gap? Why it didn't go over there? Because after closing here, see the run. See the displacement. Can you see the displacement? It has taken that buy side liquidity. This displacement, market structure shift, first fair value gap, last fair value gap. Can you see it? Is it telling you that I am going higher? If it would love to go high, then why it has given it to you? Why it didn't do it like that? See, when it has done it, then look at the run. This was the run toward that last fair value gap. It failed to go over there. No problem. It went lower. You are not confident that market is going lower or it is going higher. Maybe you are confident, not confident. You got a very nice market structure shift over here. Okay, just for example, you got a very nice market structure shift over there, but you are not sure that market is going to that fair value cap or not. Wait for more price action. But brother, if it left me without, I mean, if I don't take my entry over there and it left me without taking me, what will happen? You just missed one trade, man. You just miss one trade. Nothing happened. Even you are not going to get the market structure shift 95% of the time over here if this is a very confusing price action. Okay, because market will tell you when you should take your entry. See, where did it close? That first fair value gap. Why it went little higher? It has taken that buy side liquidity. What I told you, from 15-minute chart, it has to take some buy side liquidity first. So it has made some liquidity here. It has taken that buy side liquidity. Market structure shift. Go for that market structure shift. One fair value gap, two fair value gap. Just why not this fair value gap? Because this is at the level of the liquidity, buy side liquidity. First fair value gap, second fair value gap. This candle traded that first fair value gap, take your entry, cover your second fair value gap or breakaway gap, cover it. I mean above it. If you see it's a very huge, then go above the break. I mean the consequent encroachment of that breakaway gap. Go for that. Where I should go, brother? This is my sell side liquidity from 15-minute chart. You told that is very clean. Market is going to take that. No, man. No, wait. Look for another sell side liquidity from 1-minute chart. Can you find another sell side liquidity? Yes, brother. There is very clean sell side liquidity from 1-minute chart. Do you see any partial level around that area? I don't see any swing low, but I can see last parabolic from 1-minute chart. Okay. So where should be your entry? There should be your entry. Where should be your stop loss? There should be your stop loss. Okay, just put it over there or above the consequent encroachment of the breakaway gap or over here. Wherever you want, you can want. Take it until here. Take a partial over there. Take a partial over there. Okay. How many handle? Let me check. Only 22 handle, man. 21 handle. Okay. Then another contract went until 33 handle. What do you think? How much it will be? Just multiple it by $20. Just multiple it. Excuse me. And this is the rule of trading. This is the rule of psychology. I am not going to hold it until here. Never, man, never. Brother, I missed my entry over there. I missed it. Should I take my entry over there? Because this is a very clean displacement. Am I going to take my entry over there? No. You are not going to take your entry over there. Why? Because look at this price action. It is just falling. Okay, let me remove it. It is just falling. If you see, if you just for example, you missed this entry, okay? You didn't take your entry over there. But when price come here somewhere, it has made some buy side liquidity again, and it has taken that buy side liquidity. After that, you got market structure shift, fair value gap, boom, take your entry over there. Be confident until this. I mean, don't go to the maximum one. Just before the maximum liquidity, close your trade around this area because you are too late over here. So either you go for the last fair value gap or the last swing. Okay, I mean that is very near to that liquidity. So go until that level, but wait for this setup here. Look at the price action over here. It has just made the liquidity. Did it take that liquidity? Very clean highs. After that, did it take that high? Then market structure shift, fair value gap entry? No, man, it didn't do it. Like over here, it has made relative. This high went higher, went lower. It has taken this high already. Okay, already taken buy side liquidity above that high. Buy side liquidity already taken. Boom, market structure shift. First fair value gap, second fair value gap. If you see one fair value gap, take your entry over there. No, there is nothing wrong with that. And you can see there is also a breaker as well. Whatever, let it go. Went lower. When it went lower, look at this displacement. Very nice displacement. But before giving you this displacement, this candle, I mean this high, did it take the liquidity? No, man, it didn't take the liquidity. How do you know it is going lower? How do you know that? How do you know this candle is going to hold your trade as it has already taken this liquidity from 1-minute chart? Maybe it is going higher and take more buy side liquidity, then it will expand lower. Maybe it can happen, man. So what is the difference between you and me? Between not you and me, I mean between us and the profitable trader. What is the difference? First, they identify this trade, this entry, they identify it. Okay. How did they identify? I have already explained. Liquidity, fair value gap. Simple thing, man. To fair value gap, you all already know if you are with me for long. First and second fair value gap rules. But here, if you're confused, either let it go or wait for more confirmation that market really would love to trade that on or it doesn't want to trade that on. How do you know that it is not going to trade that on? Market will tell you. This is the confirmation. This is the confirmation from the market. Look, this run, compare this run. Which one is perfect? Which one is more clear? See, when it is going higher, it has tried to trade that last fair value gap. Now, one more time, it is going higher. See, it is going higher. It has closed here. Then see the run, man. Market structure shift. See the reaction. Directly it is telling you, brother, I'm falling. Market will tell you when you should it is going to fall. Why they're profitable? We are not, because They are not taking this entry. Even if they are missing this entry, they are not taking this entry because this is not precise price action. But brother, you are wrong. Price went lower and it has taken that liquidity. You are wrong. Yeah, obviously this time I'm wrong. Trust me, 95% of the time I will be right. It will come here somewhere, then it will go above and you will be stopped out. Don't believe me? Go to your chart, do the back test, come back to me. Just come back to me, man. You are not going to take that entry because this is not telling you that I'm falling. This is not telling you. If it can take that buy side liquidity, then if you see another market structure shift, good to go, man. Good to go. Don't force the market. Give you the entry. Never ever. Don't do it. This is psychology. We are not greedy. If I miss this trade, no problem. I will go to 15 minutes or one more time. No problem with that. I'll come here. I will look for another setup. Let me just. I will go for another setup. Market is falling, right? Okay. This is the last leg. I will mark the last fair value gap. Let's see if it can give me the fair value gap. I mean precision or not. So this is the last fair value gap from this leg. This is the last leg. Okay. See, there is no other fair value gap below that fair value gap. So I'm going to mark this fair value gap. Just a second. Okay. Okay. Where did market came? Is this last fair value gap from 15-minute chart? Anybody has any confusion? Okay. Brother, it came here, but where is the buy side liquidity? Why you are going to take that entry? Okay, so from 15-minute chart, do you see any buy side liquidity? I can see a lot of buy side liquidity. All of these are buy side liquidity. See relatively equal highs. No, I don't want to go with that. Then go with this. No, I don't want to go with that. No problem. Go with this. This is the shallow run. So this should be your buy side liquidity. Anybody has any confusion about this buy side liquidity? I don't have. Where did it came to this last parabolic gap? Am I going to take my entry over there? No, I'm not going to take my entry over there. Then what I should do? I should wait for the price action. What type of price action, man? It has to take the sell side liquidity. It has to give me a market structure shift with a very nice parabolic gap. I'll go for that. Let's see it gave me or not. Okay. This is the first time when it has reached to the last parabolic gap. First time. Remember, it went higher, it went little lower. Taken sell side liquidity one more time. Went higher. Displacement? No. Parabolic gap? No. It fall. Boom. When it fall, every liquidity has been taken. If you go to the 1 minute chart, I guess uh, you are not going up. I mean, going to get a parabolic gap from there. You are going to get a water block over there. So far, I remember. Okay, I don't remember exactly. Then market went higher. Okay, just I'm giving you the example. Okay, this is your market structure. This is your market structure sheet. Are you agree with me? I'm not agree with you. This is not market structure. Why this is your market structure sheet? Because brother, that is very swing high. I mean, obvious swing high, and this is a very clean run. See, in your yesterday's video, you told that you need immediate reaction. So this is our immediate reaction. This is your breakaway gap. This is your first parabolic gap. So I'm going to take my entry over there. Then market will go higher. Okay. So this is my setup. Okay. Just let me mark it. Rovi, I don't know you are here still here or not, but I am talking everything because of you. Okay. And I told you that don't remind me this because I will keep talking. So this is your first parabolic gap. That means the entry gap. That should be your breakaway gap. Market shouldn't go below the constant encroachment. I mean, body can't close below the constant encroachment. Okay. This is your first parabolic gap. This is your market structure. I'm just going to mark it as my market structure shape. And market has taken sell side liquidity from there. This is your sell side liquidity. How beautiful the setup is, man. No, man, this is not your setup. This is not your setup at all. Why? Because this high is not valid for shifting market structure. Why it is valid? It didn't trade any fair value gap over here. It doesn't have a swing high on its right, which is lower than that swing high. Nothing, man. Why you are going to force your market? Why you are forcing here? Take your entry. But brother, it worked. I don't care. I don't care it worked or not. I don't care, man, at all. I don't care. I'm not forcing my market to take my entry over there. Then we are going to miss that entry? No, I'm not thinking like that way. It has taken maximum liquidity from there. Remember, it has taken every liquidity from there. It has reached to the last parabolic from 15 minutes chart. Yeah, I'm waiting for this setup. It didn't give me here. So what should I do? I will wait. I will wait. Let's see. It went higher. It went lower. I mean, so many consolidation here. Okay. Finally, it has given me this swing high. Then, then it went lower. Okay. When it went lower, what it has done? Took all of these lows. One, two, three, four, five swing lows. It has taken every sell side liquidity over there at the same time where it did reach to this last fair value gap. Perfect. After taking the sell side liquidity, what I told you from my yesterday's what was it, the yesterday's video. Let me let me show it to you. Did you watch that video? It is full of information, man. If you miss this, how can I tell you that you should go for that or you should do that? Just let me show it. When I say perfect setup page, did you watch that video? Only this one video will help you to understand when you should look for the perfect setup, when you shouldn't look for the perfect set, shouldn't look for the setup, when you shouldn't entry. Just this one video, man. I am doing my hard work for your understanding. And now, if you just skip it, I have nothing to say you. I've just made I've made the breaker block selection video. Okay, so now if you watch this video, you will understand what is breaker block. Okay, now if you force yourself to understand when it is going to work, you are not going to get it from that video. This video is only to understand what is breaker block. When I will go, I will make another video when you are going to use the breaker block and how long you are going to use that breaker block, how long you can expect price will go. If you don't watch this video, you will come over there and you will tell me, brother, what is breaker block, why this one is breaker block. That is difficult for me to explain. That's why I have made this one. When I will make that on, breaker block will concept will be clear. I'll never talk about this breaker block again because I've already done my job over here. Watch this video. Just this only video will tell you when you should look for the perfect setup, when the setup is not going to work. This is gem, man. If anybody, any single person give me this, just this information I have in this video, just this information at my beginning, you have no idea how much money I have already earned. This is the video from, this is the information from ICT, but this is clarify information. Okay, just cleared specific information. You guys are not watching this and you are complaining that no, man, it doesn't work. No, it works every time because market always tell you when you should take your entry. Every time market will never tell you lie. So that is not our entry. But market has reached to the 15-minute fair value gap. Why you are not going to take that entry? Because this is not swing high that is valid for shifting market structure. Why I will take my entry? I don't care about this. If I miss it, I don't care. What market has done? Just look, okay? Market has taken one more time sell side liquidity. Why I'm expecting market will go high? Because I have only the buy side liquidity. Sell side liquidity already taken. Here, sell side already taken and reached to the last fair value gap. Where it should expand to the buy side liquidity. Toward this buy side liquidity. This was the first time. Oh man, I'm going to lose it. Is it inside the session? Yeah, we are already inside the session after 9:30. Okay, let's see what price is done. It has taken the sell side liquidity. After taking the sell side liquidity, just taking the sell side liquidity, boom. See the immediate reaction? This is the immediate reaction. Is there any market structure shift? Are you going to mark this as your market structure shift? I will go for that. That swing high is perfect for market structure shift. Why? Why this swing high is perfect for market structure shift, not this one? Let's see. It has traded this fair value gap. See, this swing high has traded that fair value gap. So in that case, it is perfect. Is there any swing high on its left, on its right? Both of them are lower than that swing high. Yes, brother, I have a swing high on its right, on its left. Both of them are lower than that swing high. So either way, it is valid swing high for shifting market structure. Is this displacement after taking the liquidity? Is this immediate displacement? Anybody has any confusion about that? Anybody, any single one has any confusion about that displacement? I don't have. This is a clean market structure shift. Oh man, then where is your fair value gap? Let's see if I can have any fair value gap. So this is my first fair value gap. This is my breakaway gap. Okay, this is my breakaway gap. So Are we going to take our entry to the lower fair value gap? No, brother, you are not going to take your entry to the lower fair value gap. You are going to take your entry to this fair value gap. Is this immediate reaction? See, after shifting market structure, three candles, just one after another, came to this fair value gap. See the immediate reaction? It didn't spend any time to reach to this first fair value gap. I don't care about this fair value gap because this is the breakaway gap. Put it stop loss below the breakaway gap. Where should I target, man? Why I'm going to take my entry over there? Why not there? Because this is optimal trade entry or something 50% or discount or premium. I'm not going looking for this premium discount 50%. Nothing at all. Nothing at all. Just two fair value cap. I just care about two fair value cap. First fair value cap, it will come here. I'm already in the market. I'll cover the last fair value cap. Just that's all. Okay. Where you are going to target, man? You have very clean buy side liquidity over here. So you are going to target over there? No, never. Then where you are going to target? You have 1 minute buy side liquidity over there. See, 1 minute very clean buy side liquidity. Are you going to target over there? I think later, yeah, later it has taken it. So it has taken it over there. And if you take that entry, you will never be stopped out. See, you will never be stopped out. It already give you the decision. I mean, it has already taken that buy side liquidity. Okay. Okay, let's see. How much handle do you have? If you take your entry over there until here, how many handle do you have? Can you see it? 103.50. That means 103 handle. One handle is equal $20. How much handle will be? $2,000. Do I need $2,000 for being profitable? Oh man, I will never do that. For me, 25 to 40 handle, more than enough. More than enough. Then where you are going to target, man? You don't have any 1 minute liquidity. You don't have it, man. Are you going to target that? I mean this fair value gap, because this is the last fair value gap from 15 minute from 1 minute chart. Okay, let's mark it. I'll just mark from here. Okay, so this is the entry, this is the exit. How many handle? 13 handle. No, I'm not, I don't care about this one, this 1 minute fair value gap. Why? Because this is only 13 handle. So if market come to this fair value gap and then stop me out, I don't care about that. I really don't care about it. I will accept my loss. Then where you are going to put your stop loss? I mean target profit above here? No man, just give me the time. This another fair value gap, last fair value gap from 1 minute chart before the buy side liquidity. This is the obvious level. That means if market would love to take that buy side liquidity, it has to be broken. If it is broken, then there is the possibilities market is going to take that buy side liquidity. If this last fair value gap can hold the price, it will go back below and it will take the sell side liquidity. So this is the obvious liquidity level. I'm going to put my stop, I mean target profit over there. This is 56 handle, huge man. I'm not going over there. I'll just put it over there above that height. See this size? I'm just going to put it above over there. How many handle? 39 handle. Man, it is very clean. It is very obvious. You are not going there. Even you are not going there. You are not. You are shit. You are not a mentor. You are nothing. Okay, no problem. Go other people who can teach you how to trade or how can you be profitable. No problem. I'm happy with that. I'm happy when market will go above that. Done. Yeah. Another thing I can do, if I can take two contract. Okay, just think this entry is for two contract. I will put it here. I will take a partial above here, just here. When market will come here, I'm already take my partial. I have put my stop loss to the break even. I took my partial over there. I put my stop loss to the break even. I let the rest to reach over here. If it can reach over there or not, I will see. If it can reach over there, my trade is closed. It closed, man. Simple. I'm not greedy. I don't need this run. Until here, I don't need it, man. If I just target it, just think. Can you take all of this pressure, all of this thing? You saw it was very near to that buy side liquidity, then it started to expand lower, 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 lower. When it come here, what do you think? You are already inside a trade and you are thinking, you are seeing that market was very near to your target, then it is very near to your stop loss. Can you hold your breath until that? I can't. I have no idea, man. I can't do it. I can't do it. I will go for some obvious level where market will obviously go. I'll take if I take two contract, then I will try to take one partial. If I take one contract, then I will put my target profit to the partial level and just close my trade. I'm happy. I get 39 handle, 40 handle. Oh man, I'm more than happy. Hi, still here, brother. Okay, thank you, man. Perfect Sunday studying. I'm sorry if I'm being rude, okay? Because when I start to talk about psychology, I am lost, something like that, okay? Appreciate the knowledge. Thank you, Jeffrey Makasi. If I pronounce your name wrongly, then I'm sorry, man. I think Jeffrey is your name. I saw your name before, so you are not new. Jeffrey Makasi. Yeah, you are not new. Hey, bro, I have sent you the analysis. I would love to hear from you. Thank you. Saddam Danjuma. Okay, brother, I will reply you. Okay, not now, but if you just send it to me to my Twitter, I'll check that and I will reply you to the to that message. Okay, just give me some more time. So guys, this is the psychological thing. The thing is, you have to wait when price is here. I'm not expecting a buy run from there. I'm not expecting it. I will wait until it reach to a certain level from higher time frame. For me, 15 minutes is my higher time frame. Okay, this is for me. Maybe you love 1 hour, you love 5 minutes, 4 hour. I'm not telling that's wrong. Obviously, that's correct, man. But for me, 15 minute last five lookup is important for me. So I go for 15 minute and 1 minute chart. That's not matter. You just need high time frame level first. When it will reach that level, until then you will wait. You will wait. You have to wait. When it will reach that level, if you see this run, okay, just look at, I was live. If you remember, in this day I took a sell over here. I closed my profit over there. I just took a sell, and then this setup I outlined in my what is that, in my live, and later I have uploaded the screenshot to my Twitter when it was perfect. Okay, so I did all of this thing in live, and then there was another setup over here. That thing was also I have been uploaded. If I just explain this setup as well, just let me explain it as well. Okay, this one, when this setup happened, and then okay, over from 1 minute. So there was the first setup, and there was the second setup. Okay, now why I'm not going for 15 minutes now here? Because I have very clean 1 minute buy side liquidity. See, this is 1 minute buy side liquidity, not 15 minutes. I have the buy side liquidity from 15 minutes here, but look over here. I have the 1 minute buy side liquidity that is not taken, but instead of that, it has made relatively equal highs. If you can understand or not. First, when I look for the 15-minute chart, 15-minute entry, I mark 15-minute buy side liquidity. I mark 15-minute last fair value gap. Now I'm in 1 minute chart. Let's come to the 1 minute fair value gap, 1 minute, sorry, 15-minute fair value gap from 1 minute chart. It gave me the precision. This is the 1 minute buy side liquidity. 1 minute, okay? Don't get confused. 1 minute. It come here. It failed to take that liquidity. Instead of that, it has made that liquidity much more stronger. What I need now? Do I need 15 minutes? No, 15-minute fair value gap will done when this is taken. This buy side liquidity is taken. Then 15-minute fair value gap has done its job. I don't need this 15-minute fair value gap anymore. I need 1 minute fair value gap. Now, when price started to fall, I will go every single 1 minute last fair value gap. Just let me show you. Okay, this is 1 minute fair value gap. There is another leg, and this is 1 minute last fair value gap. Just let me show you. Okay, so price is falling, and this is 1 minute last fair value gap, and there is another 1 minute last fair value, and I'm not going to mark it because market never reach over there. Okay, so you will understand how to use this one. Look, when price come here to this 1 minute fair value gap, try to understand, man. You have 1 minute very clean buy side liquidity. It has reached to the 1 minute last fair value gap. See this run, 1 minute run. This is the last fair value gap. It has come this fair value gap. Now there was another chance to take your entry from there, and I have taken that one from I was with George actually. I think George and Music Live, sorry, Remiges. So that is your entry point. Price come here, market structure shift, or there something market structure shift maybe somewhere here. I took entry, I took partial over there, and then I got stopped out to the break even. But whatever, that is different matter. Just go for the last fair value gap. So this is the last fair value gap. Price come here. It has taken the liquidity. All of the sell side liquidity has been taken by that trap. Did I get any market structure shift? Just a second, just a second. I'm coming back. Oh. Sorry guys, my cat actually came back from outside. Okay, so I just opened the door for him. Sorry. So when it come here, it has taken the liquidity. Yeah, it has taken all of this sell side liquidity. Did it give me any market structure shift to the above for taking that buy side liquidity? No, man. Simply market is telling you, no, man, I'm not going higher because I'm not giving you the sign to go high. I'm not doing anything. I'm just removing this one. Now this is another fair value gap. 1 minute last fair value gap. Come here for the first time. This is the first time it come to this 1 minute last fair value gap. See, to that leg. This is the 1 minute fair value gap. Why I'm looking for the 1 minute last fair value gap? Because I have 1 minute liquidity now. That is more stronger. That is more obvious. So I don't need 15 minute time frame now. I just need the 1 minute chart. It come here for the first time. It was consolidating. Do you see any higher market structure shift? Any higher market structure shift? No, brother. It is broken. Okay, I'm going to remove that one. So this is another 1 minute last fair value gap to that day. But brother, it has traded that fair value gap. No, look, there is little space is open yet. Okay, this is not balanced. Until it is not balanced, that is my last fair value gap from 1 minute chart or 15 minute chart. I don't care. It is still it has to be used. Okay, it come to this 1 minute fair value gap. Now, do you get any market structure shift? When it has come here, it has taken all of this liquidity. All of this sell side liquidity has taken by that run. After taking this, do you see any immediate reaction above that swing high for shifting market structure? Why, man? Why this one is valid for shifting market structure? You told that it has to it has to be valid. Okay, let's see if it's valid or not. Do you see a fair value gap over here? I can see very nice fair value gap. Is that swing high traded that fair value gap or not? Obviously, it has traded that fair value gap perfectly. So this swing high is valid for shifting market structure according to my rules. Is this displacement? Anybody has any confusion about that? This is displacement or not? I can see this is a very nice displacement. Okay, let's go with the setup. Is there any breakaway gap? I can see a breakaway gap. Is there any entry gap? Obviously, there is a entry gap. This is your entry gap. So just a second. This is your entry gap. So after giving you the fair value gap, is there any immediate reaction? Look at the very next candle. It has traded that fair value gap. Very next candle. So it has taken 3 times to take you entry. Where should be your target? Man, this time I'm going to target that high because that is more obvious. So I'm going to take that high. It is going to take that on. Yeah, please go for that. I'm not agree with you. I'm not going to hold my trade until that level. If I take my entry over there, this guy is disgusting. He never take. I will put my stop loss below the breakaway gap. And see, here it has traded the breakaway gap perfectly. What I told you, I don't care about the PDR. I don't care about the 50%. Nothing. I just take my entry to the first fair value gap. I cover the breakaway gap. That's all I do. Sometimes you will see it has traded the lower fair value gap. Sometimes you will see that it has traded the first fair value gap and it will fall. It will boom. I'm not going to miss my entry because I was waiting too much for that specific entry. I waited too much. So I'm not going to lose that one. Now, where should be my target profit? From 1 minute chart, can you see this buy side liquidity? This is the shallow run. So that should be your buy side liquidity. Guys, can you hear me? Or am I live? Oh man, am I talking to myself? Can you hear me, man? I don't think so. Mm-mm. Sound perfect. Oh, okay. So you can hear me. I thought I'm just talking to myself. Sorry, brother. The internet is a little slow. Okay, so I'm sorry. So whatever. Below this extreme buy side liquidity. Okay, see this extreme buy side liquidity. These two lows, this high. I mean, sorry, these two highs. This high has made this equal highs more stronger. So this is more obvious liquidity level. Okay. Now below this swing obvious liquidity, I have another liquidity level. Okay, I can hold my trade until here. It's not wrong. Okay, this time it's not wrong. If you hold your trade until that 1 minute liquidity level, it's not wrong. I'm explaining the thing by my way, but I'm not going to hold my trade until there. Where is my obvious level before going over there? This 1 minute last fair value gap. Look, this fair value gap, this candle low, this candle high. That is my obvious liquidity level. I mean, this is the last fair value gap to that specific leg. Brother, why you are not going to that last fair value gap from that leg? Because that is too small. See, it's near about 21 handle. So I'm not happy with that. Where I know market is going to take that liquidity for sure. If it fail to take that liquidity, it will take at least this liquidity. At least it will going to take that liquidity. Okay. Even if it fails to take that liquidity, it will go until that last fair value gap. Until that fair value gap. See this fair value gap? It should go to that fair value gap. Even if it failed to take that fair value gap, where is the more obvious level? This level is more obvious. I will go to that specific fair value gap because this is the also this is the last fair value gap to that specific swing low. I will go for that. Man, you are just giving us very small range. Yeah, man, I'm giving you very small range. What you can do if you take two contract, okay? For example, for me, I never take more than two contract to my live trade. So two contract is maximum for me. If I take two contract, I will put my stop loss, I mean target profit over there. I will take a partial over here. When it will reach to that level, I will take my partial over here and I will put my stop loss to the break even. Now I have already got 30 handle, 30 plus handle profit, okay? So it's near about $600. Then I will trial my stop loss when price will reach some specific level, when it will go above that high. Okay, above that high, I will put my stop loss over here, and step by step I will trial my stop loss by like that way. But I will never put my target profit. If I take one contract, I will never put my target profit over there. I will go for the last parameter. Am I going for that? Never. Even if I take 5 contract, 10 contract, I will never let one contract go toward that liquidity. Not even one contract. I'll just close everything over here. Now, this is some kind of thinking, or I mean the way you will read the price, the way you will take your entry. If you miss your entry, just for example, you miss your entry over here, you didn't take your entry over there, are you willing to take entry over here to that fair value gap, to that specific fair value gap? Are you going to take your entry over there because it has taken liquidity, market structure shift? This is your fair value gap. Are you going to take your entry over there? This is the place where you have to decide where price reach. It has reached above that high. See, it has reached above that high. That means it has taken some buy side liquidity. Now, is this high probable entry? But brother, it worked. Yeah, this time it worked. But just ask yourself, Is this high probable now? Because it has taken a swing high already. It has already taken a swing high, and I think it has traded this fair value gap as well. So this is not last fair value gap. This is the first fair value gap. Remember, every time I tell first fair value gap entry, this is the breakaway gap. First fair value gap entry, this is the breakaway gap. Now think the opposite way. This is the breakaway gap. This is the first fair value gap. So market can think, okay, I will just trade that first fair value gap and I will go lower. I will take more liquidity. Isn't it possible, man? So whenever you will take your entry, first find out, is this valid or not? Is this market structure, sorry, is this market structure shift or is this liquidity taken? Think like that way. I could tell you, I mean, for example, I could tell you, okay, brother, you missed this entry, no problem, you take your entry over there. As I explained over here, when you miss this entry, how you will take this entry, when you should take that entry. Same way, I'm just telling you here. Just ask yourself, when it has traded that area, it has traded that fair value gap, is it high probable entry? Are you sure that market is going above now from that fair value gap? I'm not sure. It's up to you. If your analysis, if your thinking, if your common sense is telling you it is a high probable, then go for that. For me, no man, it's not high probable. If I saw market didn't take that high, instead of that it reached that level, it has made relatively equal highs over there, then it could be my more probable entry because it has taken some liquidity over there. Market structure shift, this is the fair value gap, it has traded that fair value gap, it is going to take that buy side liquidity at least, then only then it could be high probable entry. But when it has taken that high, traded a fair value gap over here, that is logical for me. I'm not going to take entry over here. I don't have that much brave to take my entry over there now. Though I know I have very clean buy side liquidity over here, over there, okay. But I don't know how long it will fall. Maybe it will take that low again, maybe that low again. It will trade some this fair value gap again. Maybe I don't know. So whenever you will take your entry, you are not going to fear if you can take your entry only depending on this rule. I guess you will be confident. Okay. In the meantime, if you just join, please don't forget to give me a like. Ah, man, so much talking. Okay. And never ever be greedy. Never ever. This is more obvious. Wow, what do you tell me? Who are you to tell me, man? I'm no one to tell you. I'm no one, to be honest, brother. I am no one to tell you where should you take your profit. No one. But I'm giving you the logic. Why you need that huge run by one trade. 30 to 40 handle. What do you think? It is small, oh man. Just one contract, $20, 30 handle, $600. One day, 5 days, $3,000. Now you have taken some loss, you have taken some profit. So overall, you have taken only $1,000 in one day. $1,000 in 1 week. Sorry, in 1 week by one from account. Just $1,000 in 1 week. 4 week, $4,000. Okay, after minimizing the loss, every single thing, just by one contract. $4,000 in 1 month by one account. You can take three accounts. You can use social trader as your copy trade. How much it will be? $12,000 in 1 month. Now, when you will get confidence, you will increase your contract size. One contract will be now two contract. Your partial level, previously you actually closed your trade to the partial level. Now you are going to take partial over there and you are letting the trade go to some specific some level. Okay, so your handle will be increased, your account, I mean, sorry, your contract will be increased. So previously you had $12,000 from three account by 1 month. Just multiple the money, how much you can earn from taking simple run, very short run from some specific level. All you have to do, you have to mark your buy side liquidity. You have to wait until it reach to a higher level fair value gap. When it will come here, you have to wait for the setup, for the perfect setup. See, this is not perfect setup. As I told you, when you will see this, don't take your entry over there. Now it worked here. I agree with you. It worked here perfectly. Trust me, man. Sometimes you will see it doesn't work. Most of the time, not sometimes, most of the time, see it doesn't work like that way. To be honest, brother, it doesn't work like that. You will take losing entry. So wait for the perfect setup. If you can take the perfect setup, just if you can hold your grid, there is no one who can stop you being profitable. Just if you follow me, and the thing is, don't, you can't take over trade, okay? Just one trade, maximum two trade. No, I don't suggest two trade, one trade only. One trade, one winning trade one day, complete your trade. Just complete it. Maybe 2500, so it will be $500. $500 one day, close your chart. Close your chart, man. Just close your chart. You can't control yourself if you sit down in front of your chart. You can't do it. Nobody can do it. I can't do it. Even when I trade in my live money, when I take my profit, I close my chart. You will see that day I don't even do the live stream because I don't want to sit in front of the of my chart. That forced me to take another entry. That is psychological problem. That is the psychological issue. You have to press the close button here. See the close button here? You have to push it, man. Oh man. Later when I come back, I see if I could take that entry. I mean, sorry, I closed my chart after taking that entry. Later this entry happened. That was more perfect. I missed it. I shouldn't listen to you. This time you were lucky. So you got two winning entries. But when you are unlucky, you will take five, six, seven until you blow your account. You will keep taking your entry. Trust me, man. You will keep taking your entry until you blow your account. And when you will blow your account, you will start to think, oh no, I shouldn't take my entry today. Maybe tomorrow I would get better perfect price action. I should have wait until tomorrow. Simple logic, man. There is nothing called psychology. There is nothing. If you can just control your greed, just if you can put your target profit. Now, immature target profit is different, okay? I mean, immaturely you can kill your trade. For example, if you take your entry over here and if you want to close your trade above that height, okay, above that height, that is immature trade. Why? Because that is a very small run. You are fear of losing. That's why you are actually killing your potential profit. So you can't do it. So you have to go for some specific level. If you ask me, I go for equal highs or the last favorable gap. Swing high for taking partial or the last favorable gap. That I do, okay? But it's up to you. I mean, you will control yourself the way you can, but just do go for some obvious level. Trust me, brother. You will be the winner. So many talking. Really appreciate your time and the way you are sharing knowledge. Thank you, Ravi. Thank you very much. So, I guess it's enough for today, and not enough actually. It's huge for today. I make you bore already. I'm extremely sorry, brother. When I start to talk about psychology, I can't hold myself. Okay, I just keep talking. So, till still in my mind there are 1,000 word is just going here and they're just waiting to coming out, but I don't want to make it much more longer. Thanks for patiently waiting to listen my boring lecture. I really grateful to all of you guys, and I really expect you guys will be the millionaire. But my expectation from all of you is just this, okay? 200k plus USD. That's all my expectation from all of you, okay? Because when you will able to earn this money, I'll be benefited. Till now I'm doing it free of cost, but when you will earn this money, not 200, 2000, okay, it should be 200. Yes, sir, it should be 200k. Okay, so when you will earn this money, you have to send me the plane ticket to visit your country, okay, and every cost is yours. I can't spend even not even single penny, okay? I'm not going to spend a single penny. You have to bear all the cost. So please earn this money and give me a chance to visit your country. I love traveling, trust me, brother. Till now, I have traveled near about 31 country all over the world. Yeah, not near about. It's exactly 31 country. I love travel, and this time I would love to travel to your country by your money. Okay, so you have to just you have to earn this money, very small money. Okay, it will take maybe maximum 5 to 6 months to earn this money, maximum 6 months. If you can consistent, that will take maximum 6 months to earn 200K plus USD. Just earn this money, okay? And let me just give me a chance to visit your country, to travel to your country, by your money, okay? You have to pay everything. I'm not kidding. I'm serious. So that's all for today, guys. If anybody has any question, you can ask me the question. Otherwise, I'm going to close my session. I'm little delay, so I will wait little more for your question. Okay. If you don't have the question, please write it down as well. Okay. Please prepare to visit Africa. I love to do it, man. Lion. Oh man, my dream is to watch the African beauty. I mean, I have watched it through the what to say. I mean, the channel and National Geography. I really love to visit Africa. I'm preparing myself. I know I'm going to get invitation from a lot of people. So, done deal. We are on the journey. Yeah, thank you, man. Thank you. I just need just earn that money. Just earn it, okay, man. My life is very short. I don't know. I know I'm not going to live longer. I'm gonna die very soon. I know that I can feel it. Okay, so before dying, I would love to travel all of your country, and for that, just earn 200K. If you just earn it, I'll be happy to visit your country. I'll be happy to visit. I mean, to talk to you I mean, face to face. Okay, I would love to see how you trade in front of you, and at that moment, you will be the millionaire. So please just earn it and let me visit you, meet with you. And that's all I want from you. Okay, I guess nobody has no more question. I guess it's enough for today. If anyone, okay, I can see only 11 people, but I'm happy with that. If any of you are new, please subscribe to my channel. Don't forget to give me a like before leaving the streaming. See you guys. Bye bye.